Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
This is Bloomberg from our Middle East headquarters in Dubai. With me, Manus Granny. Your Easter Monday top stories. The US is moving ahead with plans to retaliate against 6 countries that tax internet-based companies such as Amazon and Facebook. They'll be hit with tariffs that could be a total of $1 billion a year. Among the goods targeted are Australian grand pianos and Italian anchovies. Everyone in England is going to be urged to take a coronavirus test twice a week. Free kits available through local pharmacies, community centres and home delivery services when the new regime goes live on April the 9th. With most of the adult population now having received a vaccine, the government believes rapid testing of the whole population and a system of COVID status certification will keep control over the pandemic as these restrictions are lifted. Meanwhile, France reported more than 80,000 new infections at the weekend as the country enters its 3rd nationwide lockdown. Cases have been surging since December, in part due to contagious, deadlier variants of the virus. France's death toll from the virus now stands at more than 96,000. Jordanian authorities say they foiled what they call a malicious plot by the half-brother of King Abdullah II to destabilize the kingdom. Officials have confirmed that the former Crown Prince, Hamza bin Hussein, was placed under house arrest after allegedly working with foreign entities. 16 others have also been taken into custody. Now, the prince denies involvement. And Spain is about to embark on one of the biggest ever tests of whether a 4-day work week can be implemented without harming the economy. The Prime Minister, Pedro Sanchez, will pump $59 million into the nationwide program, testing a 32-hour work week, and it amounts to Spain's biggest cut in working hours in a century. So those are your headlines as we go into this Easter bank holiday across Europe. To the dollar, Goldman Sachs have a big shift in their regime call on the dollar. They're closing their short position against commodity currencies, specifically the Aussie, along with the Kiwi. This is just 6 months after they had a big short dollar call. It's a tactical retreat. Now, to be fair, if you went with the call in the first instance, you would have made about 5%. So Kiwi, Aussie, and CAD, they're all responding a little bit more this morning. You're just seeing the Aussie lighter this morning as the dollar goes a bit higher, and the Kiwi also down 0.2%. We'll keep an eye on those along with the rest of the headlines here at Bloomberg HQ in the Middle East. This is Bloomberg.
Many leaders specialize in one industry, but others try their hand at leading vastly different firms, whether they're the world's largest shipping company or a German technology giant. Jim Hagemann Snabe is one of the latter. As chairman of both Siemens and Maersk, the Danish businessman is one of Europe's most prominent industrialists. He spent most of his career at SAP, starting as a trainee in 1990 before rising through the ranks to become co-chief executive. Snabe built his career on leading in the technology space. When Siemens tapped him as chairman, the company highlighted his extensive experience in the field. So what skills are needed to lead companies as different as Maersk and Siemens? Today, on Leaders with Lacqua, we meet Jim Hagemann-Snabe. Jim Snabe, thank you so much for joining us on Leaders with Lacqua. What do you see the role of the chairman or the chairwoman compared to a chief executive in 2021?
Well, that's a great question. Again, I've tried both roles. I normally make the joke that as a CEO, you're supposed to answer many questions to your board, and as a chairman, you don't have to. You're just there to ask the questions in the right sequence. So, in that sense, I do enjoy being able to ask now the questions. But if I'm right that we live in a world where a constant reinvention becomes the core capability of an organization to be successful over time, then of course the chairman and the board plays an important role in allowing the executive team to experiment, to not make too many detailed plans, to be overly ambitious about where they could go. And traditionally, that's not the way the board has worked. Many boards spend way too much time looking back. They spend time looking at last quarter's report, and it's done. They celebrate when the company reaches its budget. And I ask myself, well, what if it's the wrong budget? What if the world was exponential and you achieved a linear budget? And there's way too little time in the boardroom, in many boards, to discuss the experiments that could define the future. So, in my boardrooms, we certainly spend more time discussing the future than the past. I often say that we'll deal with the past until lunch, and after lunch, we'll deal with the future, and then it's a little bit up to management to discuss when to have lunch. Hopefully, we don't have lunch too late. And I really welcome an honest conversation in the boardroom. I often say that no news is bad news, that bad news is good news, because with bad news, you can make change happen. Yeah. And good news is no news. We don't have to debate the good stuff. I mean, we should debate how can we be better, which experiments matter the most. So,
Jim,
yeah, you can
as a chair, if you're asking questions, how many questions do you ask about sustainability? How many questions do you ask about diversity?
I ask a lot of questions. For me, that's an integral part of your strategy. So it's not let's have sustainability as a topic. No, it starts with sustainability in your strategy. I think we're at that inflection point now in history where sustainability used to be a separate report done by a separate department. And it was really funded by the profits the company makes. So it's how you spend your profits to do good in the world. And I think we're at an inflection point where it's becoming how you make your money. So when Siemens increases its market share in wind turbines, we are making money on the transition of energy systems from fossil to renewable. And the more we do that, the more we also help the world become more sustainable and make a better business. And so if sustainability becomes how you make money, where diversity also fits in, because if you believe in innovation, and innovation is really fueled by diverse thought and background and ideas, then of course diverse teams becomes a necessity in order to deliver on innovation. Then suddenly it's a strategy conversation that leads to a sustainable portfolio that accelerates sustainable future. And it's a strategy conversation that leads to a diverse team, not just in terms of gender, but also in terms of geography and backgrounds. I've seen that in the companies that I worked, because they're all global, and I can only say my best moments is in a diverse team thinking about how we can create products that make the world more sustainable.
Has a pandemic changed those conversations? So has it accelerated them?
I know the pandemic, in one sense, of course, a pretty devastating and tragic moment, but one that we could have foreseen. So first reflection is we were unprepared, and shame on us. We better be better prepared next time. Secondly, if there's anything good about the pandemic, it is really that it's demonstrated our incredible ability to drive change. Things that used to take months or even years, we could do in weeks. I mean, here we are in a virtual setting of an interview. That was almost impossible before. And I conduct my board meetings now virtually as well when I have to. And so suddenly we learned a new skill that we all knew we had to learn. So the question is really, what comes after the pandemic? And I'm a strong believer that we need to use that crisis to accelerate the future we had in mind. We had a long discussion in Davos, January 2020. Can we afford this shift to a sustainable future? And now we have all of this money flowing into recovery. And so now we could actually accelerate that future, invest in sustainable energies, transportation systems, et cetera, et cetera. We have, I think, clearly seen the acceleration of digital adoption in our lives, in the way we work. So how do we accelerate that, but in a responsible way? And my biggest concern is actually not so much the agenda around sustainability or digital. I'm sure they will thrive coming out of the crisis. My concern is around globalization. Are we reversing globalization because of this?
No.
Do we think that building borders is a solution? I don't. I think globalization is creating enormous value, and we need to create more resilient supply chains, but not only local supply chains.
Jim, how has the pandemic changed you as a leader?
It has certainly made me understand that the thoughts also described in my leadership model, Dreams in Detail, which is really about this constant ability to constantly reinvent an organization, has proven to be even more relevant. I thought the disruption was coming through technology, and suddenly we add a dimension, which is the pandemic that drives change. I see how, having come far in the reinvention of large companies like Siemens and Maersk, helped manage the pandemic and come out stronger from the pandemic. And the core assumption that I've always had in my leadership is that human beings are so capable if you only let them. And for 200 years of industrialization, we haven't let them. We made plans and details and told them what to do and measured them to do exactly that. And man, can people be more creative if you let them find the way. Be clear about where we're going. The dream has to be accurate. It has to be clear. It has to be meaningful. It has to be logical and emotional. And you have to build the capabilities necessary in order to unfold that dream. That's what I call the details. What do we need to be world-class at? And how do we accelerate the capability development in those areas, which is really about building human talent. And then you let go somehow and allow people to unleash their human creativity to find the best way to that future.
Up next, the trends of tomorrow. What does Jim Hagemann-Snabe see as the biggest challenges for future businesses?
You see companies like Siemens or A.P. Møller-Maersk mastering the physical world, but now moving into the digital world.
As chairman of two of Europe's biggest companies, Jim Hagemann-Snabe knows about leadership. And in his book, Dreams and Details, he writes about what's needed to succeed. Dreams, inspiring people to be part of something meaningful, and the little details that can transform an organization from the inside out. And the leader that he says embodies these qualities, Tesla founder and chief executive Elon Musk, whose bold ideas and vision have made him one of the world's richest men. But what are the trends of tomorrow for those of us who haven't founded SpaceX, and what lessons are there to learn? How do you look at the trends of tomorrow? How difficult is it to see how we'll make things, right, for an industrial company, or how we'll consume things if you're in IT?
Well, I think, first of all, the first wave of let's say, value creation in this digital era was really with the pure digital players. We've seen an enormous value creation, and I was part of that with SAP, an incredible journey. But I'm convinced now that the next phase will be the combination of hardware and software, so to say. You know, at the end of the day, we'll still have physical things. We'll have physical food and physical transportation and physical buildings, and so when you begin to add a digital dimension to a physical world, then you get this dilemma of two speeds. You have the software, which is innovating at a very high pace, and the physical parts, which are innovating at a slower pace. And the challenge is really to combine the two. I believe that if you master that, we can create significantly more value than pure play technology or software companies can. And that's a little bit what I bet on also with my shift from the software industry to the real industry, so to say.
Jim, can you give me a concrete example of where you saw that shift?
Yeah, I mean, the first shift we've seen has really been in the consumer world. So largely about connecting with people in new ways, also entertaining people in new ways. So we've seen a lot of such value creation with some of the tech giants that we know today that created platforms, and with platforms comes enormous amount of innovation on top. And now we begin to see the battle, which is the combination of hardware and software. I think the first company to really do that was Apple, who argued if I master both, I can create a better experience for my customer. We see the tech companies, Google, Microsoft, now moving into hardware because they want to combine the two. And you see companies like Siemens or A.P. Møller-Mærsk mastering the physical world, but now moving into the digital world. So, for instance, when we add a digital dimension to a train, we are able to optimize the service of that train. And ideally, you buy fewer trains because we can make the trains deliver a network service with the same amount of passengers because we keep the trains up and running. We are preventive in the maintenance. Same is true for a wind turbine. We read the data from sensors on the turbine and can keep it running most of the time. And with that, of course, we create more value. And in the transportation industry, often customers spend more money on paperwork than they do actually moving the container. And so also there we're digitizing the physical paperwork in order to create more transparency and simplicity and an ease of consumption for customers. That's really where the value comes in. Tesla is a good example of a hardware, which is a car combined with a software. And if you look at the valuation of Tesla today, it's clearly not an automotive company. It's a technology company that has mastered the two worlds out of one hand.
With unconventional leadership, I would say, at the top of Tesla.
Yes.
What does Elon Musk teach you about leadership?
Well, he certainly dreams big. And I think that's one of my arguments, that you can't have mediocre plans because you want to achieve your plan. And it's really hard to get exponential plans approved by the board. So I think you need to exchange that plan. The time of the detailed business plan is over because it's only valid if you can predict the future. And I don't think you can predict the future anymore. Technologies are disrupting any industry right now, and nobody can predict the next move. So you actually shift the leadership model from being managing according to plans, into having very ambitious dreams about a future state and a role your company can play in that. Elon Musk's vision was not just to build an electric car, it was to reinvent transportation of human beings in a sustainable way. And then you take a different approach because it's such a meaningful, big dream that you can inspire people in your company, stakeholders around your company, and create enormous value. So that, I think, is the first recommendation or learning that I have, is you've got to be extremely ambitious in your leadership. Otherwise, it'll be mediocre, and you won't be able to reinvent the company.
Jim, in your book, Dreams and Details, is that the premise of what you think leadership will be in the future? Dream big and disrupt?
Yes, I think so. I think we're at a moment in history now where the time of disruption happens much more frequently. If I use my incredible opportunity at SAP, I started there as a trainee in 1990, so it's some years ago, and moved up into that organization, became the co-CEO 20 years later in 2010 with my good friend and colleague Bill McDermott. And in that period of time, I mean, the company was founded in 1972 by 5 people who had an idea of disrupting the tech industry with a category called enterprise software. Nobody believed them then. They created SAP, and look where it is today. Then 20 years later, in 92, exactly 20 years later, they came out with a new version of that software, which was geared around, the death of the mainframe, so to say, and the invention of networked computers. So that was 20 years between the disruptions, and the reinvention was driven from a position of strength. Then in 2000, the internet became really the infrastructure of choice, and the company reinvented itself again. And when I was asked to take on the co-CEO role with Bill McDermott, the intent was to reinvent again. So you see how the time between each of these reinventions just gets shorter and shorter. From 20 years in the first wave, it was actually from 2002 to 2010, and the last only 8 years between the reinventions. And the reinvention is going on again now at Siemens, 5 years later. So if that's the premise we live in, because digital has entered all industries, then the skill of a leader moves from being able to predict mediocre outcomes in business plans to enable an organization to be agile, understand and predict future patterns, and react faster to that than any competitor out there.
Up next, we talk big questions facing big tech.
How do we use data without taking people's privacies away?
Tell us something you're doing that doesn't work out, where you've failed or something you can say you're not good at.
Let me tell you something. There is plenty that I am not good at and plenty that I've failed at, but I'm not afraid to fail.
Technology has made the world a better connected place and changed the way people live, shop, and communicate. But tech giants haven't always had a spotless reputation. Between data breaches, the mishandling of private information, and fake accounts linked to elections, big tech has fallen short of its ideals, sparking the attention of regulators across the globe. Jim Hagemann-Snabe is calling for technology to be more responsible. His book, Tech for Life, argues that it's vital to make sure that these platforms work for everyone without creating monopolies or eroding civil liberty. He says businesses need to concentrate on both profit and purpose. You talk also quite often about irresponsible digitalization. What exactly does that mean?
Well, it is a fact that we have now gotten all of these new technologies. The internet was was born, and the World Wide Web was born in 1989. It was intended to share research results among researchers and became this opportunity to distribute information, and we're putting more and more weight on that internet. In parallel to that, we have now added data from consumers, and now we're in the industrial era of digitization, so now we're adding data from things, from cars, from mobile phones, from sensors on wind turbines, from everything. And with that, suddenly we have an enormous intelligence about what's going on in this world. And we begin to see how some companies are misusing that access to information. And so I'm asking myself three questions that I think are critical in a responsible use of technology. Number one, how do we use data without taking people's privacies away? Number two, how do we use platforms without creating monopolies that control markets? And number three, which I think is the big challenge ahead of us, how do we use AI, artificial intelligence, in a way where we don't lose control, but have a human-centric approach to the use of such a powerful technology? And that, for me, the answer to those three questions is responsible use of technology. And we don't see that in all companies today.
That's probably an understatement. Who should be in charge of setting the tone? Who should be in charge of making sure that the 3 points you addressed are adhered to?
That is a super good question. And the issue is that, of course, in the past, we would expect policymakers to make policies that would ensure a responsible use of our technology. It's always been the case that when technology comes, you can overuse it, so to say, and then it becomes dangerous. Whether that's a car that suddenly drives too fast and you need to put limitations on it, or it's a energy source like nuclear, which can also be used as a weapon, or it's data, which can also be misused. The issue is that in the digital world, the innovation pace is so high that I think it's naive to believe that the policymakers can keep up and guard that. So I'm actually suggesting in a book which I call Tech for Life that it is the ones building technology, it is the companies using technology that should stop for a moment and ask themselves these three questions and make sure that we don't use technology for what it can be used for, but what we want it to be used for. I mean, I often use the examples of the real world. When I mail a letter with a physical mail company, not so often anymore, but when I do expect that they don't open my letter. They just transport it. And so why are we accepting that in the digital world where we're trying to get the same kind of communication going, it's an email, why is it suddenly acceptable that the mailman opens my letter to better understand my interests? It's totally unacceptable.
But often, Jim, I guess it's because we don't understand, right? We don't really know what the technology we use goes to. So is it up to regulators or is it up to politicians to enforce it?
Yeah, first of all, I think it's people who work with technology. As I said, there has to be a revolution, kind of a bottom-up. It starts with people programming, saying, well, is that a reasonable way of using technology, even if I could? Then, of course, we need some regulation. But see, we don't want to slow the pace of innovation down. So I'm also a little bit hesitant to not put too many restrictions on. We can't foresee how the technology will be used. So if we put too many restrictions on, we may lose the opportunity, for instance, to solve cancer, and because that's access to data thing. And if we limit that too much, we may not be able to. So what if it starts with responsible use for anyone who's involved with technology?
Jim Snabe, thank you so much for joining us on Leaders with Lacqua.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
I'm Menace Crenny from Bloomberg's Middle East headquarters in Dubai with your Easter Monday top stories. Benjamin Netanyahu's corruption trial swings into high gear today as the prosecutors begin to build their courtroom case against the Israeli leader. They allege the country's longest-serving premier abused his position to illicitly accept and at times demand fine wines, expensive cigars from billionaire friends. Netanyahu denies any wrongdoing. Credit Suisse is said to be discussing replacing the chief risk officer, Lara Warner. That after a string of miscues that led to losses, potentially totaling billions of dollars. Sources say the bank is expected to give an update on its exposure to the Archegos capital this week, as well as the fates of some top executives. Delta Airlines cancelled about 100 flights due to staff shortages at the weekend, forcing the carrier to open up its middle seats Sunday to Monday and a month earlier than planned. The move was aimed at increasing passenger capacity to try and accommodate the flyers affected by the cancellations. Well, in the past 30 minutes, we've just had breaking news on the CPI from Turkey, and it's rising 6 months in a row on the CPI, 16.2%. Now, that's pretty much in line with the estimates. This is the lira you see in the market over the past 6 days. I mean, we've lost nearly 12% since Nahi Agbal was moved out of the central bank governorship. Now, the currency, as you can see, it has been under incredible pressure here. Now, this CPI print this morning is not going to leave the new central bank governor much room to cut rates. It was really oil that drove the narrative, oil prices rising by over 12% in the quarter. Not much wiggle room for the new central bank governor in Turkey. This is Bloomberg.
The coronavirus pandemic has changed billions of lives in countless ways. It's marked our day-to-day beyond recognition, converting the impossible to imagine into daily routines. Barren offices have left the busiest sections of cities abandoned, while unemployment and uncertainty plague economies. Faceless, masked populations observe a, quote, social distance, one of the many terms coined in the year of the pandemic. And while the outbreak has taught us a lot about limits, it's also shown how strong leadership can convert the once impossible into reality. Before last year, it was almost unheard of for a vaccine to be developed in under 5 years.
Hopefully we can move along rather rapidly to get an answer. Are they safe and effective in a timely manner, which I've said right from the beginning would likely be a year to a year and a half.
But scientists across the world have managed to produce 9 effective coronavirus vaccines in 2020. One such drug is mRNA-1273. You'll know it as the Moderna vaccine. The drug bears the company's name. The leader is founder and chairman Noubar Afeyan. Today, he's based in Massachusetts, but Afeyan's path to the U.S. was all but straightforward. Afeyan was born in Beirut to parents who survived the Armenian genocide. Lebanon's civil war drove his family to Canada in the 1970s. Afeyan eventually moved to the U.S. for a PhD in biochemical engineering at MIT, and he's been there ever since. These experiences shaped him as a person and as a leader. He says he's dedicated his career to improving the human condition through science. Today, on Leaders with Lacqua, we meet Noubar Afeyan. How has your childhood impacted the entrepreneur you've become?
I was, in fact, born in the Middle East in Lebanon of Armenian parents. Lebanon was quite a cosmopolitan place from childhood. I had lots of different influences and different cultures that I thought were quite normal to be intermixed, and lots of new ideas from all over the world. I think that, unfortunately, growing up at 13 years old, we were forced to leave the country due to a civil war that had just started, and fortunately the country of Canada took our family in as essentially political refugees. And that was probably the beginning of a set of changes in my life that got me accustomed to change, to not fearing a new environment and a new set of challenges. And then I think, probably the environment in the Middle East early on of kind of people having a long history of ideas and trade and how to think about business, and in my case, science over time. I'm sure those are all things that had influence, but I must say I wasn't aware of them until much later in my life when I started doing a set of things that I began to draw from those early experiences on. I'll say the last thing is that having seen 9 months of a civil war, having seen the building next to the building I grew up in explode, completely come down to the ground, and the consequences of fatalities there at a young age, that adversity probably made me somewhat tougher and more accepting of what would otherwise probably be extremely worrisome challenges in my business life. There were lots of ups and downs, and when you put it in the context of a country in civil war and the challenges there, it does make you realize that these are relatively small things to overcome.
You immigrated to Canada and then to the US. Do immigrants have a different idea of business?
Physical immigrants have already undergone the kind of trauma of being uprooted, rerouted, going from feeling familiar to completely unfamiliar, therefore disadvantaged, and having to struggle to make a go of it. And those set of experiences absolutely come in handy, both in startups, which are very much an act of survival and ultimately triumph if you can get there, but also of innovation. And that's the second thing I want to say, which is that immigrants also embody a mindset that is all about going to someplace new and accepting a new reality. And I've come over the years to view innovation as nothing more than intellectual immigration.
You were interested in things where no one else was. I think you have a PhD in biochemical engineering. At the time, it was such a startup almost in what we were studying. Why did you go into that?
Well, I actually went to an undergraduate program at McGill University in Montreal in chemical engineering. And I've thought about it in hindsight, but around the time I was graduating, I started realizing that I did not want to do what traditional chemical engineering was all about, which at that time was petrochemicals and plastics and many important fields. But I was drawn to things that were quite new and where nothing was known. And biology in 1982-83 timeframe was just beginning to become the object of the affection of engineers, just beginning. And so I was drawn to it, to be at a frontier. And look, I've explained it this way. I don't consider myself to have any natural gifts or any advantages intellectually, but I do know one thing, that in the frontier, there's so few people that I don't need a big advantage to be able to actually do something because the crowd thins out.
But what's your philosophy at Flagship? So there must be, 100 ideas a day, and maybe 4 of those work. So how do you pick those 4 and not the other 96?
Well, Flagship is an attempt to institutionalize 2 things that society considers completely individual and improvisational. That is making breakthrough innovations and starting new companies. Both of those today we consider as quite rarefied, unlikely to succeed acts. And 21 years ago, almost to the day, we set out to institutionalize those 2 things. Now, I say that because how Flagship operates has a process and a systematic nature, and our whole process embraces, I've seen, the notion of evolution, Darwinian evolution. And Darwinian evolution is basically variation, selection, and iteration. We simply apply that idea to new thoughts, to new original ideas. That is, we create variation, lots of different versions of the ideas. We create selection pressure. Lots of different people tell us how bad our ideas are and why they won't work. And then iteration, where we overcome the objections long before we even go into a lab to test out the ideas. And that process produces almost the survival of the fittest. So it is not our approach as investors to be choosing winners and losers. We allow the winners and losers to compete for our attention and our involvement. And the ones that are meritorious get that attention, and those are the ones we build. It's a very different way. We don't choose, we let the process lead to the winners emerging. And that's what's allowed us to systematize and over the years create well over 100 companies in this way.
Up next, Nubar Afeyan tells us how Moderna got ahead.
Of course, we had a public health duty to respond, but boy, did we not sit there and say, and 9 months from now, we're going to have a vaccine, and 12 months from now, it's going to be in 100 million people. That is a consequence. Frankly, I think if we had thought about that, we probably would have gotten scared.
Vaccines have so far proven they can protect people from developing symptoms of COVID-19. One among them, Moderna's two-part shot, which is 94.5% effective. But the genesis of the vaccine predates the pandemic by some time. The biotech firm, founded and led by Nubar Afeyan, was already in talks with U.S. authorities to test its vaccine manufacturing capacity. Despite the head start, the journey to develop a COVID-19 vaccine using messenger RNA technology was hardly a bed of roses. Only Pfizer has come up with another shot using this groundbreaking technology. When Afeyan started exploring the idea of mRNA biotech in 2010, there was little information about how it might work. At the time, he said they didn't know if mRNA could effectively get into human cells, or whether it would cause a negative immune reaction. But after many trials, and with the health agencies across the world approving the vaccine, the method has proven effective. Moderna will be among the small group of companies whose medical breakthroughs helped pull humanity out of the pandemic. Is there a problem of actually pitting the health versus economy? Is this what's made it more difficult at the start?
In this particular pandemic, certainly once we were afflicted and it was coming on like a tsunami of viral attack, it was too late for sure. And so I think that the steps suggested, especially given the lack of experience that people had, last time this happened was 100 years ago, people barely traveled. And so the conditions were so different that people threw out all the playbooks. And so, yes, I think that there were economic self-preservation, getting the next vote, all sorts of things that motivated, political actors to do what they do. And the World Health Organization was in no position, by the way, in a period where global institutions are under unprecedented attack of their, legitimacy or their usefulness. Of course, it was a perfect storm of conditions that allowed the virus to do maybe not the maximal harm, but damn close to the maximum harm it could have done.
Did you ever dream of finding a vaccine so quickly in the midst of a global pandemic?
No, because I'm so, and the whole team we have here, as well as in our companies, are so focused on platforms as opposed to the output of the platforms, right, that interestingly, we find ourselves, I sometimes liken to people as, we make instruments, and then there's, people that are performers that play music on our instruments. And so because in this case, the instrument now all of a sudden enabled a form of music that is helping the world, we don't fantasize over the music. We actually dream up what would be an instrument that would actually allow beautiful music to be made. I'm using, an artistic analogy, but it really is the same thing. Our focus is the impact comes from the fact that we enable a platform out of which dozens and dozens of solutions come. And so, when the pandemic came, for us, it was a great, I remember it very well. January 21st, my daughter's birthday, is the first time I had a discussion with Stefan Bancel, where he called me from Europe, where he had some discussions. For the first time, this was being discussed. And I thought, great, here's an opportunity to test our instrument, our platform, mRNA, in a very rapid turnaround application. So we were, of course, we had a public health duty to respond, but boy, did we not sit there and say, and 9 months from now, we're going to have a vaccine, and 12 months from now, it's going to be in 100 million people. That is a consequence. Frankly, I think if we had thought about that, we probably would have gotten scared. We didn't think much about that. We thought that's 6 steps beyond where we are. If we just do every single step well, we have a chance of getting there.
Does your vaccine and the mRNA technology actually change everything going forward? What's the use of it? First of all, can you adapt this vaccine to new variants of COVID-19? And does it change the cures for cancer? Does it change other problems, for example, in genetic conditions?
Well, the vaccine doesn't do that. The vaccine has simply alerted the world that what we do might have that promise, and it's up to us to prove that it can do that. So I think that the promise of messenger RNA was evident to some of us 10 years ago, more people 5 years ago when we started attracting significant private capital, eventually in 2018 when we did a public offering. But more and more, the burden is on us to show that it can be broadly applicable. What we now know is that we can manufacture it at scales that no pharmaceutical or vaccine has ever been made at before, from a volume standpoint. We've gone from being the tiniest in output pharmaceutical company to among the biggest in certainly output of volume. And so I think that messenger RNA will take its proper place in the arsenal of medicines. How many things it applies to, we believe being an information molecule, it is going to be useful for many, many things well beyond vaccines. We have a dozen programs that are not in vaccines that are using messenger RNA. But it's up to us to prove it. I do not want to make grandiose claims that this changes everything. Certainly, people working on vaccines ought to give some thought as to why the next one should take 5 years instead of a year or two. It'll change some of the regulatory mindsets, perhaps, but I sure hope that this experience changes people's willingness to relent to the fact that sickness happens and there's not much we can do about it.
Do you think it will? Or there are a lot of people that, of course, question that it was unclear actually at the beginning with even regulators coming up with, things that could make other people question what exactly mRNA did. Do you need more transparency? Do you have worries that there's an anti-vaxxer movement that's also becoming stronger almost by the day?
Well, that's several questions in one. Let me just quickly unpack and say that I don't envy the regulators in having had to go from a start in the beginning of last year to being able to know so much about the science and the technology to be able to effectively regulate it. Nobody wants more than us a proper regulator engaged in ensuring that what we're doing ensures then the safety of those who receive the vaccine. And for that, we needed heroic effort by the FDA, by the European regulators, etc. So, and we got that, and I truly commend them. Anybody who says that corners were cut and people didn't know what they were doing, except for the fact that people did not know that this may not work and did not accept that, which we did not. People knew what they were doing, and they did it well. Now, having done it now, how will that affect how they think about the next wave of vaccines? Look, question back to you would be, are you going to be willing to sit next to somebody clearly suffering from raging flu on an airplane simply by knowing that it's not COVID? We've accepted, transmitting to each other, otherwise also deadly diseases, maybe not as deadly as this, but 30, 40, 50,000 people dying a year from just flu is problematic. Do we now think that some of these technologies could address that much better than the 50%, again, defeatist level we've accepted for flu vaccines? I believe that's the case. Is society going to demand it? Let's see.
Up next, do leaders work 9 to 5? How much do you love Dolly Parton?
Surprisingly, when I learned that she had chosen to make a donation in one of our sites to support their work with respect to our vaccine, I was pleased that our arcs had connected ever so indirectly.
trading revenues coming in better than expected, everything. Cash, $1.4 trillion of cash, one of the most notable aspects of this report that was stellar.
The whole idea here is to make sure that the Murban is a globally freely traded commodity. And as such, it allows everybody around the world to be able to utilize it for either pricing or managing their price.
Entrepreneurs spend a lot of time wondering where their next big idea will come from. Having launched his first company at the age of 24, Noubar Afeyan fits the definition of a serial entrepreneur. At 48, he founded the now world-famous biotech firm Moderna. The company's mission statement embodies the hyperactivity of its founder. Instead of waiting for problems to turn up, Moderna seeks out the next challenge and tries to offer solutions before issues arise. 9 years after the company was founded, the pandemic hit. And for Noubar Afeyan, being out in front has paid off. The chairman of Moderna firmly believes preparing for the unknown can transform how the field of medicine tackles problems. Noubar Afeyan is still with us. Do you remember that first conversation with your first investor? What was that like?
My first meeting with the first investor I ever had was the day after Black Monday in 1987, in October, when the market crashed. Wow. I was 24 years old, and I was just graduated after a few months from my PhD, and literally I had no idea why a stock market crashing would ever affect the very first venture capitalist I met, whose name was Ginger Moore. She was one of the absolute giants in the venture capital business in biotech already back in 1983. And I went to see her. It was a place called Oak Capital Management. I remember it like it was yesterday, all full of hope and pride, and they were devastated. I mean, it was like an operating room. It was bleeding all over the place, financially bleeding all over the place. And it was interesting because she told me at the time, listen, if you want to continue doing this, this may be the best time because nobody else is going to do a startup in this environment. But she also explained to me why NASDAQ and Dow crashing would lead to venture capitalists not wanting to put money out and how the financial system was intertwined. It's really stuck with me because during the internet bubble that burst, I used to teach at MIT at the time, and I used to tell my students, this is the time when real entrepreneurs start companies, not entrepreneurs who think it's really easy. And so it's a better time to really wade into this because you're not going to have to answer why your idea is different than 100 other people. Maybe it'll be one other idea you have to defend against. So that's how we started.
What kind of leader are you? How would you describe yourself in your leadership style?
I would say certainly I'm a leader that works on figuring out destinations that we should aim for and then chooses the directions as opposed to the other way around. I'm a leader that rather attracts and works with people who have both expertise, experience, but also creativity and appetite that far exceeds mine, even though I can give them a bit of a run for their money, because I think that's whether that's through diversity in background, diversity in age, diversity in even kind of field of expertise. If you saw my team up close, it's just an incredible melange of folks that we're fellow journeymen and journeywomen, if there is such a word, in the sense that we're learning. So I'd say it's really and a level of transparency. Very early on, I concluded that you cannot in a startup pretend you know what's going to happen, because you don't. And many leaders, try to project a level of certainty about what's going to happen in order for others to follow them. I'd rather project uncertainty about what's going to happen so that people kind of huddle up and make sure we can go forward together versus with false self-confidence. I'll say one last thing, and it's less about the leader, but it's about my mindset. Years and years ago when I was asked by MIT to teach, and I told myself you can never teach these things, I decided to instead of teaching, try to help people learn, which I convinced myself was a different activity, and it turned out to be. And I thought, what would I have wanted to know going into the space about the mindset that it takes to innovate in a breakthrough way? And what I've concluded is that mindset is best defined as paranoid optimism. And that's a combination of words that back in 25 years ago when I first started using it, you couldn't do a Google search. Well, there was no Google, but you couldn't do a Google search around. But now I think many people realize that it's one thing to be a cautious optimist, but a paranoid optimist basically is rather an optimist, but they're constantly doubting their assumptions, and they're constantly assuming things are going to change. So there's a level of almost a tortured mindset between projecting, believing, acting, but questioning.
How much do you love Dolly Parton? Did you love her before she invested in the Moderna vaccine?
No. Dolly Parton was my, when I grew up, she was an iconic. Look, I came to this country knowing very little about American culture, and even at the time, I viewed her as one of the iconic artists, and she was definitely a personality, and so that's how I knew her. I knew a bit of her music. She made movies. So I found her to be an interesting kind of person. I almost felt like she embodied a piece of Americana, if you will, in her life and in her behavior. Then, quite surprisingly, when I learned that she had chosen to make a donation in one of our sites to support their work with respect to our vaccine, I was pleased that our arcs have connected ever so indirectly through a common interest in this activity.
I'm very happy that I'm going to get my Moderna shot today.
And of course, I think whatever accolade she's getting for having contributed to this cause generally is deserved, and everybody ought to do everything they can.
I know you teach, you play basketball. There's a number of things that you do, and you work full-time almost all of the time. What's the thing you've missed the most, actually, in the last 12 months because of the pandemic, because of the lockdowns?
Look, there's plenty of stuff we all miss. I miss my family in Sweden. My wife is from there. I spent every summer a chunk of time there. That's been cut off. And in a funny way, having lived in a civil war, early on in March when this whole thing shut down, I told people it's going to feel like a civil war in the sense that we're going to be accepting things we would have never thought possible. Fortunately, it's not people killing people, but unfortunately, it is other natural forces killing people. And I'll say that it's hurt me personally. It's taken away a member of my family in Sweden, and it happened very early on, and that's made the cause of working on this even more personal and even more difficult, because every time I talk about the vaccine, every time I talk about people suffering, I remember my father-in-law.
Noubar Afeyan, thank you so much for joining us.
Thank you.
Chang explores how a chip shortage snarled everything from phones to cars on a Bloomberg television special, Chip Crunch, Wednesday on Bloomberg Technology.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg from our Middle East headquarters in Dubai. I'm Manus Krani. Your Easter Monday top stories. Everyone in England is being urged to take a coronavirus test twice a week. Free kits will be made available through April 9th. With the most adult population now having received a vaccine, the government believes rapid testing of the whole population and a system of COVID status certification will help control the pandemic as restrictions are eased. China has set a target of vaccinating 40% of its population by the end of June. That's about 560 million people rolling out. Beijing is pushing the Communist Party members and staff at state-owned firms to get the shots. The country's inoculation effort has stepped up in recent weeks, and it's now administering an average of 5 million doses a day. France has reported more than 80,000 new infections at the weekend as the country enters its third nationwide lockdown. Cases have been surging since December, in part due to more contagious, deadlier variants of the virus. France's death toll from the virus now stands at more than 90,000 people. Jordanian authorities say they have foiled what they are calling a malicious plot by the half-brother of King Abdullah II to destabilize the kingdom. Officials have confirmed that the former Crown Prince Hamza bin Hussein was placed under house arrest after allegedly working with foreign entities. 16 others have been taken into custody. The prince denies involvement. Elon Musk's bet on growth in China and Europe is starting to pay off. Tesla, the car maker, beat expectations for the first quarter of this year, delivering around 4,000 cars. That's in the fourth quarter. The company said that the Model S and X were exceptionally well received in China. What happens next in the US markets will be in no small part attributed to the dollar. You're looking at the dollar index this morning up by 1/8%. Goldman Sachs have shuttered their short dollar call. They're closing the short dollar call. They made it 6 months ago. They said they're turning it around. They want to close their short dollar position against the commodity currencies. As you can see, dollar up by 1/8%. Asian stocks trade higher by 1/8% this morning. Even though China and Hong Kong are closed, you're looking at Japanese stocks trading at a considerable discount to the S&P 500, which is holding above the 4,000 level, as still there is the assumption that you will get stimulus. The size and the scale of the infrastructure stimulus, that is the bigger debate. Oil down by 1.4% as frackers return in the Permian Basin with new rig counts. This is Bloomberg.
COVID-19 has exposed a sickness in global society. It's exacerbated deep-rooted inequalities in the United States.
The wealth divide has just exploded in the wrong direction.
Structural inequalities is not healthy. It means we're leaving productivity on the table.
Around the world, migrant laborers are bearing the brunt of the crisis. And while rich nations are well into their vaccine campaigns, developing countries are falling behind.
We're not going to have as swift a recovery in the United States or in Europe if we don't make sure that everybody gets vaccinated.
2.5 million women have left the U.S. workforce due to the pandemic, while corporations face a growing demand to fulfill promises of inclusion.
Collectively, large companies have not done a great job on diversity.
You have to believe it's critical for your business.
As the world starts on a path to recovery, how do we ensure no one gets left behind?
The moment for radical change has arrived. Clearly the system is not working.
Trailblazers in business, technology, and public health convene to map out a more equal and inclusive future. It's time to move from words to action. This is the Bloomberg Equality Summit.
Hello, I'm Carol Masser. The Bloomberg Equality Summit was held virtually as the U.S. marked 1 year since the start of the COVID-19 crisis. In the first months of 2021, new vaccines hold the promise of a return to normal. Even so, it's clear greater efforts will be needed to repair the social and economic damage of a pandemic that has exposed and deepened inequities across gender, class, and race. Leaders at the front lines of industry and policy came together at the summit to discuss how companies and institutions can work to close these gaps and bring about lasting change. The process starts with recognizing the stakes of the challenge.
It's become a vicious, destructive cycle where inequality has fueled the spread of the disease, and then the spread has created both health, economic, and education inequality that further fuels inequality. So I think the moment for radical change has arrived. You know, clearly the system is not working.
Everywhere you go, the majority of people believe that they should vaccinate their own country first. And they struggle to understand sometimes how important it is to open up economies in other countries because, you know, every country is dependent on imports and exports.
The economic impact of the pandemic has fallen disproportionately on women's shoulders. For the first time in history, for example, the economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
This is not about doing a favor for women, people of color. This is about EPS. This is about higher EBITDA. This is about business, because we know from the research and the evidence that companies that are more diverse are more profitable.
One thing that COVID has revealed to all of us is that racial equity, structural racism is a thing. It always has been.
Listen, I think George Floyd and the uproar around George Floyd, when everybody saw a man get murdered in real life.
I am one who hopes that what we saw last year in terms of the uprising against the social injustice and the racism in the United States as well as in other countries, perhaps, and I hope, has reached an inflection point.
Women have had the most devastation, women and people of color, during this crisis. And so if we're going to have a full response and a swift response, we have to stop thinking as a world of gender equality as this nice thing to do when we get to it, or this side issue. No, it is the central issue. We are in a crisis for women and people of color in this country.
The Bill and Melinda Gates Foundation has been supporting vaccine research and global public health initiatives for decades. So co-chair Melinda Gates is well aware of the structural inequities complicating the fight against COVID-19. She shared how the vaccine rollout is progressing with Bloomberg's Emily Chang.
We still have a ways to go. You know, we're seeing the light at the end of the tunnel here in the United States, but until all Americans are vaccinated, we still have a ways to go. But, you know, it's going to be a while until the entire world is vaccinated. So this is going to still be with us the next few years. And I think we're going to have to really watch these variants that'll be bouncing around the world. That's actually still quite concerning.
What is it about the variants that concern you?
Well, because every time we know viruses mutate, but when they mutate, you know, they can become sometimes more deadly or more contagious. And so anytime you see these mutations, we need to be on top of them in terms of surveillance. And then we're going to have to figure out, do we need to tune various vaccines to take care of them?
Your foundation has committed $1.75 billion to the fight against COVID. I know your team is very diligent about looking at where and how that money is spent. In your view, where is the vaccine rollout working and what's not working?
Well, I think it's working in some of our high-income countries. We're starting to finally see, you know, much broader distribution, for instance, in the United States and in some of the European countries, but it is not at all working yet for middle and low-income countries. And, you know, those are places where people are struggling. They have their loved ones who get ill. They can't get them to a hospital, much less an ICU. And so they are really still struggling in many countries around the world.
So there's obviously a moral case for vaccine equity, but what about the economic case? Why should somebody in New York or San Francisco care when somebody in Africa gets the vaccine?
Well, absolutely, it's the right moral thing to do. But economically, we're not going to have as swift a recovery in the United States or in Europe if we don't make sure that everybody gets vaccinated, because what will happen is this disease, we know it crosses borders. We've seen it all over the world. And so as these variants break out, they will absolutely come back into the United States and Europe and Japan. And so our supply chains won't fully be up and running. We won't get our travel industry fully and leisure up and running, or the business community up and running in terms of travel. So economically, if we're going to reopen the global economy, we've got to take care of this everywhere.
Coming up, Sheryl Sandberg and why diversity and inclusion are top priorities at Facebook.
We believe that this has to be everyone's priority because it's good for our business. It's going to build better products that serve the people all over the world.
This is Bloomberg. Welcome back to a special look at highlights from the 4th Annual Bloomberg Equality Summit. This year's theme, From Words to Action. After the police killing of George Floyd touched off mass protests last year, corporations rushed to affirm their commitments to diversity. In fact, the hiring of chief diversity officers spiked in the summer of 2020. Will this translate into lasting change? A Bloomberg survey of 100 corporations suggests that representation of minorities within their workforce continues to lag behind. Facebook's Sheryl Sandberg and Maxine Williams spoke with Bloomberg's Pamela Hutchinson about the social media giant's commitment to diversity and why it's critical to business.
I'm in every room because there is the assumption that there are inclusion issues in everything, and you don't want to just go to them when it occurs to you or as an afterthought. You want from the beginning that we are considering that in the way we would every other major issue. So it's integral. So I think that has been the major change for me, reporting to Sheryl and now participating in a broader range of meetings. And I think it's been great in terms of the impact because, again, we can get to things earlier. We have different perspectives in the room. I may know nothing about how to build a product, but I certainly know how the products we build impact the people who use them. And having that insight early on, I think, is just really beneficial to us and to the people we serve in the world. Thanks,
So
Sheryl. I know you want to say something.
Well, we hired Maxine 7.5 years ago. And it's actually really fun because Maxine and I have done a million things internally together. But I think this is our first public stage. So I was really excited to share her with the world because she's absolutely incredible. But look, we hired our chief diversity officer 7.5 years ago. The commitment to this has to come from the top. And having Maxine officially reporting to me puts her in every meeting. It puts her in my staff meetings, Mark's staff meetings. But what I would say to other companies thinking about doing this is there's lots of different structures and lots of different ways you can do it. But here's what you have to do. You have to believe it's critical for your business. We have to do this not just because it's the right thing to do, even though I want to be clear it is. Getting more women into leadership roles, getting more women into your company, getting more people of color into leadership roles and into your company, getting more women of color, because that's where the intersectionality of race and gender makes it the hardest challenges. We have to solve these problems for Black and Latinas, have to, for those women as well. You have to know that it's good for your business, because it is. There is so much data that diverse teams make better decisions, have better results. Look at coronavirus. I've been arguing that we need more female leaders for a long time. The countries run by women had lower death rates. If there was ever a proof point, that more diversity of leadership and female leadership mattered. The world just handed it to us. And it's a very sad one, but it's one we should be paying attention to. We believe, not just me and Maxine, but Mark, our product leaders, our CTO, our Women at Group is sponsored by our CTO. Our Black at Group is our exec sponsor, is our head of our business, whole entire sales organization, who's white. We believe that this has to be everyone's priority because it's good for our business. It's going to build better products that serve the people all over the world. You have to believe that. And then everything else falls from there.
Another challenge in Silicon Valley, on Wall Street and around the world, is access to capital for businesses run by people of color and women. In fact, global venture capital funding for women-led startups dropped even lower to just 2.3% in 2020. However, some investors are determined to change the status quo. TPG co-CEO John Winkelried discussed his company's efforts with Bloomberg's Scarlett Fu.
One of the challenges that we face is getting diverse entrepreneurs capital, flowing capital to growing companies that are founded and led by diverse people. Until we solve the problem of putting diverse people into the seat of being capital allocators, running funds, and being able to use their networks to flow capital in that direction, I don't think we'll solve this problem. I don't think we'll make a lot of progress on it. So we've been working on this over the course of the last couple of years, really, and we've now developed an initiative internally at TPG to really brand this and drive this in a more systematic, institutional way. So the objective of TPG Next is seeding, supporting, and scaling the next generation of diverse investors and managers. And we're focused on women, people of color, LGBTQ individuals. So that's basically what it is.
Can you explain how investments in TPG Next differ from what you did with, say, Airbnb or Spotify or any of your other investments in the past?
Yeah, well, I mean, Next is really designed to be sort of the catalyst to get diverse people into seats where whether it's private equity, whether it's venture, whether it's real estate, again, as you mentioned, horizontal, it's really designed to be the effectively seed and launch managers that will then ultimately go on to be themselves successful investors and successful allocators of capital.
That was TPG co-CEO John Winkelried, and TPG, by the way, also a sponsor of the Bloomberg Equality Summit. Now let's turn to another group that's been hit hard by the pandemic: children who have spent the past year in an environment of virtual education. Access to technology is critical to a student's success, but with vast inequalities in the digital space, millions are at risk of being left behind. Harlem Children's Zone President Jeffrey Canada offered the Biden administration advice on bridging the digital divide.
I think the first thing that the Biden administration should do is admit that digital connectivity is the equivalent of textbooks. And we can't pretend that some kids can learn without it. Whether you're using it all the time or part of the time or seldom, young people have to be able to access information. The other thing I think the Biden administration has to make sure is that families can afford to be connected. There's a lot more we could do if we take this moment and decide, let's really figure out the best practice in online instruction and when that can happen for our children.
Coming up, 2020 was a year of protest against institutional racism. John Rogers is confident that corporate America got the message.
There seems to be just this true commitment to being like, what can we do better?
As for Ken Chenault, he says business leaders' actions have to catch up with their words.
There's some CEOs who have been in place for 10, 15, 20 years who tell me there's a pipeline issue. And I say, excuse me, you're controlling the pipeline.
This is Bloomberg.
Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim, we're going to be riveted to that, and we're going to do what is required.
Welcome back to our special, highlights from the Bloomberg Equality Summit. The headline numbers show the jobs are starting to come back in the U.S., and yet underneath the surface, there are some disturbing trends. The unemployment rate for Black Americans rose in February, while the overall rate fell, underscoring how recovery from the coronavirus crisis remains uneven. Errol Investments' John Rogers told Bloomberg's Sonali Basak that the pandemic exposed flaws in a system that was designed to help minority businesses.
Well, of course, when the pandemic hit, construction halted. People were, events stopped happening, so catering wasn't so important. Buildings closed, or janitorial services were not so important. The white Americans who were someone's accountant or lawyer or money manager or technology guru, those economies could do really well. Those businesses could thrive during this pandemic. So the wealth divide has just exploded in the wrong direction, partially because we have fallen into this trap of thinking about minority companies doing business in these sort of supply chain areas. At the University of Chicago, what we call it is business diversity, to show all the buyers that we want to be included in the parts of the economy where the wealth and jobs are created today. And we have the flexibility to work from home if necessary, if you have a tragedy like we had with this pandemic. So I think that is really at the heart of why things have gotten so much worse lately. And we have to change that and move this term business diversity, which we are doing here actually throughout Chicagoland. Our business community is starting to embrace that term and realize that supplier diversity is literally 40 years out of date.
So we have a question from the audience with our few minutes left, and it's what evidence or signs of hope do you see to move the discourse away from polarized views and towards universalization? Do you see the conversation changing?
Yes, the conversation is changing and pretty dramatically. After George Floyd's murder, the number of calls that I've gotten from CEOs from various businesses to come and speak about diversity and inclusion, there seems to be just this true commitment to thinking, like, what can we do better? On the boards that I'm on at McDonald's, Nike, New York Times, I'm having much more fulsome conversations with our management teams around what can we do, how can we ratchet up and get more done, and really move the needle for Black community, where are the holes, what needs to begin, what needs to be done better. So I'm hopeful there. And then finally, we have a progressive congressional leadership, and that is helping, and a progressive president. People often look to Washington, D.C. and get guidance and direction. And I think that's also helping to create some real tailwinds that are really creating more equal opportunity for minority entrepreneurs to do well, and they maybe do finally have access to being a customer. And I think that'll be very, very important.
From individual conversation, words, comes collective action. A coalition of leading U.S. companies has launched the 110 Initiative, pledging to upskill, hire, and advance 1 million Black Americans over the next decade. Ken Chenault is a co-founder of 110, and he shared why he thinks it will work with Bloomberg's David Weston.
What we felt very strongly is that there was a need to get corporations collectively focused on this issue with a very specific target. 1 million jobs in 10 years. And what that meant was that each company had to make a financial commitment for 10 years and a jobs commitment for 10 years. Because we've got to be persistent at this, David. Many companies have tried this on their own. A few have been successful, but the reality is collectively, large companies have not done a great job on diversity. And part of it is we have to be more innovative and develop some approaches that will allow more Blacks to be in family-sustaining wages. There's nothing more ennobling than in fact to have a job. But it can't be a dead-end job.
So this is talking about entry level and above entry level, moving
And
people
above,
up the
yes.
chain.
Yes.
Let's talk about the top of the chain, because this is something that is much discussed, have been for a long time. I'm not sure how much progress we've really made at the top of the companies, and that's C-suite, that's boards, you name it, in terms of really having diversity and inclusion. You have a lot of experience with this, Ken. Where are we at this point? Do you think we have made progress?
I think we've made some progress, but if you look at the numbers, it's disappointing. So, David, there were more Black CEOs in the early 2000s than there are now. I think there were at one point 10 or 11 Black CEOs. I think there are 4. Ken Frazier stepping down from Merck after an incredible career, terrific CEO. But the reality is you would have hoped that we would have had 30 CEOs of people of color. That has not happened. There's some CEOs who have been in place for 10, 15, 20 years who tell me there's a pipeline issue. And I say, excuse me, you're controlling the pipeline. For this upper rung, you can be very focused. You can say, who are 10 people in my organization that I think have the capabilities to move up and really make sure that getting the mentoring, the job assignments, you're holding them highly accountable for performance. But I don't think we've had this focus and we haven't held people accountable.
Equality was a major issue for voters in the 2020 presidential election, and the new chair of the White House Council of Economic Advisors has made it clear it will be a policy priority for the Biden administration. Princeton economist Cecilia Rouse is the first Black American to lead the council. She spoke with Bloomberg's Jacqueline Simmons at the summit.
Structural inequalities is not healthy. It means we're leaving productivity on the table. Just as we know that income inequality and wealth inequality is not helpful to economic growth. President Biden, Vice President Harris are really committed to ensuring that racial equity, that gender equity are infused throughout the federal government, throughout our policymaking. Fundamentally, what we can be doing at the federal level is ensuring that women and other caretakers, but there are disproportionately women, are have the support that they need in order to balance their family responsibilities and their work. And I would also add ensuring that jobs pay well. So, with policies such as the minimum wage, the federal minimum wage has not been raised in 10 years. Ensuring that our home health workers have good jobs, that they don't have to be working 2 or 3 jobs and stitching them together in order to make a decent living. So I think those are some of the ways in which we ensure that women, especially people of color, are making a fair wage for fair work.
And that wraps up our recap of the Bloomberg Equality Summit. You can find much more coverage on the newly redesigned and expanded equality page at Bloomberg.com. It features analysis, information, and lots of reporting from teams throughout the global Bloomberg newsroom. Terminal clients can also get there through a new function, EQLY Go. Thanks so much for watching. I'm Carol Masser. This is Bloomberg.
We're really going at it with the best that Intel has to offer, and the world needs more semiconductors. The world needs a more balanced supply chain. We're one of the few companies that can step in to do that.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
From Bloomberg's Middle East headquarters in Dubai, I'm Manus Krani. These are your top stories for Easter Monday. India has added more than 100,000 coronavirus infections over the last 24 hours. That record increase has pushed the country's richest state to order people to work from home. It's also shutting malls and restaurants for the rest of the month. Credit Suisse is said to be discussing replacing Chief Risk Officer Lara Warner. That after a string of miscues that led to potentially losses of billions of dollars. Sources say the bank is expected to give an update on its exposure for Archegos Capital this week, as the fate of top executives is also considered. Jordanian authorities say they foiled what they are calling a malicious plot on behalf of King Abdullah II to destabilize the kingdom. Officials have confirmed that the former Crown Prince Hamza bin Hussein was placed under house arrest after allegedly working with foreign entities. 16 others were also taken into custody. The prince denies involvement. To the markets, we're seeing stocks hold above the 4,000 level. Oil is a little bit lower as more supply returns in the Permian Basin. You're seeing the riggers return, so to speak, the most number of rigs on the ground in the Permian Basin since 2020, 13 new rigs. So oil is down by nearly 2% now as OPEC Plus adds back 2 million barrels. Aussie dollar is up 1/8%. Goldman Sachs are closing their short dollar versus commodity currencies. This is one of the protagonists in the crosshairs of that call. Aussie dollar 76.22, and dollar yen, you're seeing the market as short as it's been for 2 years on that, but we just see a little bit of reprieve on the dollar strength. This is Bloomberg.
It has the makings of one of the tech world's greatest comebacks. Chinese internet old-timer Baidu has pulled itself back from the brink of near obscurity, and it's now on the cusp of re-emerging as one of the country's most influential companies after losing its lead to a string of hard-driving competitors. Bold bets on autonomous vehicles and AI chips are starting to come good. Its smart speakers and cloud businesses are posting double-digit growth. But a government crackdown on China's tech champions is casting a long shadow over the sector. And that competition, well, it's only getting more heated. Now, after more than 3 years, the US-educated founder and CEO of Baidu, Robin Li, has agreed to speak exclusively to Bloomberg TV about his company's transformation and about his future. This is a conversation with Baidu CEO Robin Li. Looking at almost record highs now for Baidu's share price. Do you see that as a validation from investors for this strategy change, this focus on AI, on autonomous vehicles, on semiconductors?
I think our strategy has not changed much over the past 2 or 3 years. It's that the market takes time to realize that autonomous driving or AI has big potential, and Baidu is having a lead on that. So 2 years ago, or even 1 year ago, when we spent a lot of money in AI, in autonomous driving, it was a negative, impact to our stock price because you lose money by doing that. It hurts your EPS. Nowadays, it seems that investor sentiment has changed. They all of a sudden realize that, this thing has a big future, and Baidu's investment in AI and in intelligent driving will someday pay off. And I'm happy that the market has started to pick up this kind of message. But for us, we've been investing not for 1 year, not for 3 years, not for 5 years. We've been investing in AI for more than 10 years. We probably lost a lot of money by doing this, but I think eventually we will be rewarded by doing this.
What is the rationale then for this secondary listing in Hong Kong?
I think it's quite straightforward. Baidu is based in Beijing, and we want investors in Asia, those who are in the same time zone, can easily invest in Baidu. They can have a better opportunity to grow with us. And, there were U.S.-China tensions for the past few years. I think investors also have this kind of concerns. Although we're not that, concerned about delisting, but I think having another exchange for Baidu stock is overall good for the investors and also good for people around the China area to really share our growth.
And you're really talking about going out on a limb as the business 8 years ago, 10 years ago, to invest in these areas when many others weren't. How much of an advantage then do you think that gives Baidu going forward?
That gives us a lot of advantage because, this kind of technical problems are very hard. It takes time and it takes a lot of money to really get that done. Or I would even say today, we're not done yet. We're far from done. We will continue to invest for the next 10, 20 years, and our pace of investment will not slow down. We will continue to add more to our R&D budget so that we will maintain this kind of lead. AI is a very broad market, and it can be applied to many, many industries. And there are lots of innovation that can be done when you get into those specific industries. I'm very confident, and also I'm very determined.
What are the growth prospects for the broader business looking like heading into the rest of the year?
This year, we have an easy comp. Last year, because of COVID, our business was affected. So this year, the core business will have a pretty good growth rate. But more importantly, the new business, the new AI-enabled business, be it AI cloud or intelligent driving, it's been growing very fast.
Well, you're right. So double-digit growth is what we've seen in terms of your AI-powered smart devices and the cloud unit of the business. Does that growth continue to accelerate?
Yes, especially for AI cloud. We separately disclosed the cloud revenue. Each quarter, you can see that it's growing very quickly, and the growth rate for Q4 was higher than Q3, and the growth rate for Q3 was higher than Q2. So it's quite obvious.
I believe advertising revenue accounts for about 70% of overall revenues. Non-advertising revenue is clearly increasing, as we just touched on.
Yeah.
At what point do you see non-advertising revenue overtaking advertising revenue? And if so, what time frame?
Yeah, it will happen. I cannot see, accurately which year, but I think the trend is quite clear. This is not, Baidu is not alone. If you look at other, large internet companies, most of them, for most of them, advertising is a minority of their revenue.
What kind of acquisitions might you be looking at this stage?
We think technology is at the core competence of Baidu. We would look for technologies that could complement with our own strategy and technology portfolio. But in the meantime, if we are short of, let's say, operating experiences or talents, those are all possibilities.
And would you be looking domestically for those acquisitions primarily, or overseas as well?
I would say primarily domestic. We were more optimistic about international before, but because of the trade tension, it's increasingly difficult for us to invest in the U.S.
You studied in the U.S., of course. You've built an incredibly successful business here in China. Where do you think the US-China relationship is going ultimately?
My preference is certainly that both countries can work together, and I think by working together, a lot of things can be done faster, and the world will be better off. Like you mentioned, I spent quite a few years in the U.S. I know the U.S. Well, and I love my country. I love China. I think for Baidu's success, we obviously are rooted here in China. We will benefit from a very large market and the government policy to encourage innovation. But we also benefit from our U.S. partners. They supply parts. They help us to grow faster. I very much like to stay coupled instead of decoupled.
Coming up, why Robin Lee says his autonomous cars could soon be taking on Tesla.
I'm quite confident that we will be able to roll out the most advanced car in terms of autonomy.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
You have a partnership with Geely, one of China's biggest car makers, for autonomous electric vehicles. What is the aspiration with that partnership?
We realize that we have never built cars before, and we need help. And Geely is a natural fit because they are one of the leading car makers here in China. They have a lot of experience. They ship millions of cars every year, and they have good capability of managing the supply chain to ensure the quality and cost, all that kind of things that we're not good at. When I talk to Li Shufu, the founder of Geely, we are very much on the same page. He wanted Baidu to control this car maker company, and we want to get the expertise from their car making experience.
What's the production time frame? How many units are you targeting?
A car, it really typically would take about 3 years to get a car onto the market. We'll try to get it on the market sooner rather than later. It's probably too early to announce a number of units at this time because it's still early. But I'm quite confident that we will be able to roll out the most advanced car in terms of autonomy.
But before 2024, it sounds like.
That's right. That's
okay.
Right.
And you talked about the competition, Tesla, of course, but also Xiaopeng, NIO. We're also seeing the likes of Foxconn, Huawei, Evergrande, all kind of moving into this space. Very competitive.
Yeah.
Is there a risk of this being oversaturated, this market?
There are, but again, I think this is a very large market. There will be many players instead of just Baidu. But what I think most people don't realize that it requires a lot of investment in R&D, in technology. And we started back in 2013. In the future, I think everybody believes that autonomous feature is the most important feature for an electric vehicle, right? And just autonomy itself requires a lot of investment in technology. Last year, we spent about 20 billion RMB in R&D. This is more than any other EV company has spent, and probably more than all of them combined, the companies you mentioned. We are determined to spend a lot of money for the next 10, 20 years to make sure we have the best and strongest autonomous platform.
Sounds like Robin Lee versus Elon Musk. Do you think you'll be able to take on Tesla?
I think we are quite different. You know, we are an open platform. We want everybody to be successful. We don't just want to build our own cars. So in addition to the venture Jidu, we also supply technology to other OEMs. We want them to use our autonomous driving capability too. We will probably also run a fleet. We will run robot taxi. We want the consumers to enjoy true self-driving cars sooner rather than later. We want to save their ride-hailing cost. There are lots of things we can do, and we will partner with people to do that. So this is very different from Tesla.
Okay. I want to get more on the AI chips focus, because that's really interesting. You've raised about $230 million US to develop the chips unit of the business. What are you hoping to achieve ultimately?
Well, it actually started quite a long time ago, probably 10 years ago, when we were running a very large server farm, and we need to customize some of the servers so that it would run faster or cost us less. And we found that by designing our own AI accelerator would do that job. So we started this kind of chip design quite a long time ago with a very simple reason. We want to save money for our servers. So starting from last year, we had our first Kunlun chip on the market. It's not really on the market because over 50% of the chips was used by our own server farm. But it served the purpose, right? We didn't have to pay a very hefty price for third-party, high-end AI chips. We could use our own. It saves money and runs faster. It fits our needs better. But then all of a sudden, I realized this is not just for Baidu. It's actually a lot of industry, a lot of other companies also want this kind of high-end AI chips.
And we're seeing that chip shortage play out globally right now. So it seems like a good move. The Kunlun chip is a 7 nanomillimeter chip. You've said you're going to start mass production this year. Has that started? And where do you see most of the demand coming from?
Yeah, the 7 nanometer one is Kunlun 2. It's coming up this year, and it's being produced by the fabs. So we do expect that the performance will be 3 times better, and the internal demand is already there. The external demand, we found that is quite strong because, as you mentioned, there's a shortage on high-end chips.
Can you specify which sectors you expect to see most demand from?
It crosses many industries because AI can help in a lot of scenarios, in a lot of cases, and wherever you need high-end chips, be it a data center or edge computing for smart transportation, for energy sector, for education, or for finance, they all need this kind of high-end chips to do complicated AI.
Have there been any discussions internally about spinning that unit off at some point?
Depending on how you define spinning off, we already raised outside money, so that operation will be run more independently than before. But Baidu is still the controlling shareholder. We will still support them wholeheartedly.
And this focus on AI and on chips dovetails with government policy, the 5-year plan. How much of that is by accident, by coincidence, by design? How helpful is it?
Well, on the surface, I think it's more like by accident. As I mentioned, we started this like 10 years ago, purely out of our own needs. We just want to save money. But along the way, we gradually realized, this is much more important than just internal use. The whole country, a lot of companies also need this kind of high-end advanced chips. As AI is being adopted by many industries, as people continue to realize that higher computing power can generate better AI results, the market demand skyrocketed. So we feel lucky from this perspective, but it's also kind of more like designed because we are a technology company. Our mission is to make the complicated world simpler through technology. This is one of the most important technology in the AI era. If not us, who else can do a better job?
Coming up, China's regulators crack down. Alibaba's been hit. Tencent is in the spotlight. Could Baidu be next?
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The regulators here are now squarely focused on an anti-monopoly regulatory change, reining in financial technology. How do you think the technological regulatory environment is going to change in China? How is it going to impact a business like Baidu?
The country has never emphasized innovation more than they do today, right? Innovation is at the center of China's modernization, according to the official documents. And I think companies like us, we invest, more than 15% of our total revenue every year to do R&D. I think the government like that. And in the meanwhile, I think antitrust is also good for innovation. You just cannot imagine, the number one and number two guy all of a sudden merge and gaining more than 90% of market share in the US. But that happened quite a few times in China before. That's not good for innovation. So I think that the antitrust push is kind of justified.
Baidu has been fined recently for what the regulators say are monopolistic practices, for not flagging deals to the regulators. Is there a risk that you're going to have to unwind some of your deals?
That's not very accurate to say, because the law probably requires a certain kind of deal seek for approval, right? For that particular deal, we did not seek for approval in time, and it doesn't mean that we had monopoly practices. The fine was not for that. And I also think it's not right for the government to block every deal, right? Certain kind of liquidity is also good for innovation. You just cannot do monopoly things.
Are there steps that you're taking now to adjust to the new regulatory environment here?
Yeah, if we do a deal of large scale, we will seek for approval in advance.
The government is also encouraging companies to open up their data. How do you think that is going to play out? Has that started yet, that drive?
It's very much in line with our belief. We run a lot of open platforms. For autonomous driving, it's Apollo, right? For AI in general, we have Baidu Brain, which is also open. We have PaddlePaddle, the most popular Chinese deep learning framework. Those are also open source. We want a lot of people to use our platform. We're open to everyone. In a lot of cases, it's free for them. It's not only good for the society, it's also good for us. We get a lot of feedbacks.
A lot of the focus has been on Alibaba and Ant and Tencent. Do you feel like Baidu is better off in some ways, that you're slightly sheltered from this?
Well, I can't speak for them, but like I mentioned, we like openness. We want to share data with other partners, and we think that's good for our technology too.
Another big topic here that involves technology, a lot of debate online about this, is the 996, the almost more than 70-hour work week that many technology companies and their employees go through and is the reality for many people. Do you think that push, that drive, the amount of hours that people have to put into their work in tech companies here, do you think that has to change? Do you think that needs to be rethought, 996?
It depends. If the employees are voluntary, I think that's okay, especially for those young people. If they want to become more successful, they need to work harder than their peers, right? This is just natural. But if, from a company perspective, if you demand them to do 996, I think that's wrong. I think employees have the right to work and to rest and to enjoy life. It's their choice. And at Baidu, we have this kind of philosophy, right? It's really up to you. If you want to work harder, we welcome that. If you want to enjoy life, that's okay too.
I want to switch focus really to you and your future. We've seen some changes at the top of some of the big tech companies here in China in terms of leadership, some big names stepping down, making way for others. Is there a succession plan at Baidu?
I always wanted to find someone who can replace me as CEO. But in the meantime, I do enjoy my current work. I like technology. I like to see all the changes happen. I like to see, our technology can contribute to the society. So whether I'll be the CEO or not, probably it's not that important. It's just as long as I'm doing things that I like, I will be happy. But having said that, I increasingly spend a lot of time these days to work with the Baidu people so that their capability keep improving, especially in the innovation front. I think I need to train them. I need to inspire them to become more innovative. That's over the past year or so, I spent a lot of time on that.
Okay, so you've been looking for a CEO. Who is your number two, though, Robin?
I wouldn't rank our executives from number 2 to number 10. They're all very talented, hardworking, and has big potential. I want them all to grow and become better and more successful.
But you're in no rush to retire anytime soon, it sounds like.
If I have to stay on the CEO position, I will.
Robin Li's ambitious bets on chips and driverless cars has positioned his company to reap the rewards of the next technological revolution. But competition is intense. US-China rivalry could upend the sector, and China's regulations, well, they can change on a dime. Robin Li will need all the skill and luck he can muster to cement Baidu's position at the top of China's AI table. That was a conversation with Baidu CEO Robin Li on Bloomberg Television. I'm Tom McKenzie.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the
fight against climate change, Bloomberg Green has you covered.
It's a once-in-a-generation investment in our economic future, a chance to win the future, paid for by asking big corporations, many of which do not pay any taxes at all, just to begin to pay their fair share.
The American Jobs Plan is not about short-term stimulus. It's about making sure that America is positioned to compete for the next decade and for the generation ahead.
We're coming back, and we're going to come back stronger. And with this American Jobs Plan, we're going to come back stronger than ever in our country.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Good morning from New York. I'm Kaylee Lines alongside Tom Keene. Francine Lacqua and Matt Miller are off today. Our top stories this morning. Growing pains, the global economy is on track for its fastest growth in more than half a century. But emerging markets and the euro area may be left out. Let's make a deal. Republicans may be willing to back an infrastructure package, but only if President Biden agrees to spend a lot less. And shakeup at Credit Suisse, billions in losses could lead to departures from the executive suite. Well, Tom, it's Monday morning. You are making your return to the 5 a.m. Eastern hour.
I am. Boy, did I get the short straw. Farrell was going to be here, but he's on sabbatical as well. Kaylee, wonderful to be with you. We got lots to talk about to launch up the week. And Kaylee, what I would note is moments ago, a headline out from Spain that they may reduce economic growth. We saw that over the long weekend. That's when people bury these headlines from France. Yep. And you really fold in the pandemic and each country struggling away from the U.S. and UK success. Where's that economic growth going to be as we go into the summer?
It's going to be from the U.S. and from China, Tom, but this is, as you can bet, going to be the topic of conversation come those IMF and World Bank meetings this week. The divergence we are seeing in the recovery. Yes, there is a recovery here where we are in New York, in the U.S., but that picture is not the same everywhere, Tom.
That's not the same, and I'm pleased to announce that we'll have some important conversations from these odd meetings of the IMF. This is the time of year where Francine and I go to Washington, and you know, you make a joke about it, folks, but the fact is they do some terrific economic research. And through the week, we'll have some of those efforts. Our team's putting that together right now. Let me do a data check right now. Equities, bonds, currencies, 5 a.m. commodities. I'm awake. Futures up 18. I've done this before. Futures up 18. The VIX, VIX is 18.00. I can't believe where the VIX is 17.99. That is something. The real yield comes in, and that's a very, very important, larger negative number. It's been pretty much stasis so far. And Kaylee, I had to put Bitcoin in there. Afterthought got a Bitcoin in her Easter basket, which I thought was pretty good.
Got to talk about Bitcoin on a Monday morning, right around $57,000, Tom. We continue to watch it. All eyes on it. I am also have my eyes on a few stocks moving in pre-market trading. The big outperformer early on at 5 a.m. Eastern time is Invitae Corp. This is on reports that SoftBank is leading a $1.2 billion investment into the company. That's according to Dow Jones, has the stock higher by about 8.5%. You also have AbCellera. It was a big gainer on Thursday on news of a combination or a collaboration, I should say, with Gilead on an antibody discovery over the next couple of years. That stock is higher by around about 8%. Skills is a company, shares were down 40% over the month of March, but we, on the second day of trading in April, maybe seeing a bit of dip buying coming in. That stock is higher by around about 5% at this point. And Tesla reported deliveries yesterday, first quarter deliveries, about 15,000 above the average analyst estimate. So that is leading shares higher. It is higher by about 6.5% before the bell. Now let's take a look at what is ahead for this coming week. Today kicks off those spring meetings for the IMF and World Bank that Tom and I were just talking about. Look out for key interviews throughout the week, and Fed watchers will pour through minutes on Wednesday for clues on inflation and tapering. On Thursday, we're going to get the all-important U.S. initial jobless claims, and on Friday, U.S. PPI data, Tom.
Yeah, it's going to be interesting to see what the Fed minutes look like, and we're a little bit distant from April 28 in the Fed meeting, but I think really the zeitgeist of the weekend and the Easter weekend was the adjustments to GDP growth depending on the virus outcome. Michael McKee dovetails this like no one. He's our international economics and policy correspondent. We drag him away from the leftovers of the Easter basket. Michael, what I noticed over the weekend was the buoyancy of the American jobs report, the buoyancy of American GDP guesstimates, and frankly, maybe China as well, and other nations are struggling.
That's true, Tom. We have a real divergence in the recovery pace, but it's a little bit different than we've seen in the past in that it doesn't mean that all of the developed markets are recovering at the same speed. The U.S. and China are, but Europe is still well behind. Some of the smaller emerging markets have already gotten economic growth fast enough to where they're seeing inflation, and so they're diverging because they have to raise interest rates. It's going to be an interesting recovery, not synchronized this time, even though the shutdown was fairly synchronized.
Well, the recovery here in the U.S., Mike, obviously is taking shape, and it's looking a bit more robust than the rest of the world. Specifically, when we're looking at the jobs report on Friday, a blowout number. Are we going to continue to see that pace of jobs growth continuing as we move forward throughout the recovery? And if it does, if we get month after month of upside surprises, at what point does it change the calculus for the Fed?
Well, that's a good question. We should keep getting those kinds of numbers because as the economy opens up, people want to go back to work and companies want to open up again. It's not like after a typical recession where you have to work down inventories and then you have to see demand return. The anticipation is demand will turn on sort of like a light switch, not immediately, but as people get vaccinated, they'll be much more willing to go out and spend more money. And so states open up, cities open up, and businesses open up and bring people back. Now, there's going to be scarring. There's going to be a delay in getting everybody back to work, but you'll have some major job growth over the next 7 or 8 months, and that will speed up the U.S. economy. The real question is how much more do we get from all of the stimulus payments that went out and went into the bank? The problem is a lot of people spent theirs, needed to, and there may not be as much of a kick as people anticipate, but we don't know yet.
All right, Michael McKee, Bloomberg International Economics and Policy Correspondent. Thank you so much. And turning now to Credit Suisse, the Swiss bank is said to be in discussion to replace its chief risk officer, Laura Warner, as losses mount from both the Archegos and Greensill fiascos. For more, Bloomberg Sonali Basak joins us now. I guess the question, Sonali, is even if they, replace her, does that go far enough to placate investors? Is that really going to restore confidence in Credit Suisse's ability to manage risk?
Yeah, and it's going to be a tough week over at Credit Suisse. It's not even just her that they're taking a look at. You have to really look at a wide range of executives, ones that are in charge of the businesses and whether they felt incentivized to take on such risky clients. And then on top of that also, what about the risk management? I mean, how troubled was it and how far down does it go? At the end of the day, it's easy to change rules, Kaylee, but it's not easy to change culture. And that's what we're talking about at Credit Suisse.
Maybe I missed it, Sonali, but have we heard from Morgan Stanley? Are they going to do a Credit Suisse, or are they going to escape this like Goldman Sachs?
Oh, no. They're pretty in the clear. You have Morgan Stanley and Goldman Sachs that got out pretty early here. And it draws the question, right? I mean, is it that Credit Suisse and Nomura were not charging as much as they should have? Were they not keeping tabs on their, did they not sell enough? There's a lot of questions with how last week and the week before went down alone. Remember, Credit Suisse kind of just wanted the issue to go away in early conversations they had with the other banks, Tom. But Morgan Stanley and Goldman sold billions of dollars worth of stocks early. Then again, right. This was still a client of all of them.
Sonali, let's switch to the state of Wall Street. It's April. It's sort of after the bonus season. Everybody's lining up the summer place and all that. Is that enthusiasm there? I mean, does Wall Street have the enthusiasm to enjoy the summer, or is it all hands on deck?
Well, they have the money, right? They came off of a record year, right? They had great bonus seasons for the most part if you were performing, and business was good everywhere. But I've got to say, when I talk to people, Tom, now, there are a lot of concerns. Nobody sounds so sanguine.
Yeah,
They're
I agree.
Worried about the state of the market. They're not ready to make big commitments. What's more is you're talking about the Hamptons, right? I mean, look.
No, I wouldn't.
Well, over the weekend, Dow Jones had been reporting that New York State taxes, income taxes for people who earn more than $1 million are likely to go up. So, there's.
Shocked.
Well, do you live here? Do you live in Florida? It's still a question mark. And, that Hamptons home plan might be on hold, at least for the big buy.
Well, Shanali, I live down in the financial district. It is still probably the quietest neighborhood in Manhattan. When's it going to get busy again? Is it ever going to be what it was when it comes to Wall Street?
Yeah, we're hearing from a lot of people. And last week I spoke to an executive over at Carlyle who really echoed a lot of other people. September, right? Fall is when they want people back in fuller force. That's when they expect vaccines to be flowing much more freely. So September, people are encouraging, the people who believe in vacations are encouraging people to take the summer off and be back by September.
All right, still several months away at this point. Thank you so much to Bloomberg's Shanali Bosick. And coming up next, Matt Maley, Miller Tabak equity strategist, talking about the state of Wall Street and the markets. And then, of course, later this hour, Kit Jukes, Societe Generale chief FX strategist. What's his take on the dollar's strength? This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
It's a once-in-a-generation investment in our economic future, a chance to win the future, paid for by asking big corporations, many of which do not pay any taxes at all, just to begin to pay their fair share.
It's a huge tax increase, for one thing, and it's a tax increase on small businesses, on job creators in the United States of America.
The American Jobs Plan is not about short-term stimulus. It's about making sure that America is positioned to compete for the next decade and for the generation ahead.
We're coming back, and we're going to come back strong. And with this American Jobs Plan, we're going to come back stronger than ever in our country.
That was President Joe Biden and U.S. officials debating the president's latest spending proposal. Joining us now is Matt Miller, Miller Tabak chief equity strategist. Matt, I guess the fundamental question is how much infrastructure spending has already been priced in? And if it has to get whittled down in order to get Republican support, if it isn't as robust, what happens?
Well, I mean, that's the big question because it looks like we're going to have to raise taxes to bring that in, and that's always tough for the stock market. But the key thing I want to note is that even if they do pass it, it's all going to be back end loaded into the third and fourth year of the Biden administration. That's still positive on a long term basis, but the tax increases will come immediately. So my big concern right now is that the stock market is priced in basically anything we're going to get for 2021. In terms of economic growth and earnings growth, which are still going to be great, but the market has already priced that in. And really, even for certainly for the first half of 2022, and this infrastructure project, no matter how big it is, isn't really going to kick in until the third or fourth year of the administration.
So how much of the upside catalyst for more fiscal spending is going to be muted by potential higher corporate tax rates?
Oh, I think a lot. I mean, and I don't want to sound overly bearish here, but we understand. Everybody's talking about how great the earnings growth, both economic growth, GDP growth, and earnings growth is going to be this year. I mean, 7% GDP growth, 25% earnings growth. That's great, but you're comparing it to 2020. You really should be doing it to 2019, pre-pandemic, because the stock market is way higher than it was pre-pandemic. So there's a reason why the market, 23 times earnings and 3 times sales is expensive, and it gives us less upside follow through, and it makes it, even though we've talked a lot in the last 6 to 8 months about being a stock pickers market, group pickers market, it's going to be even more so as we move this year, I think.
The summary here so far this year is a VIX from 31 to 23. We're enjoying 17.97 right now. I've got green on the screen with a nice lift this morning, and the grand assumption here among most strategists is the place to not be is the FANGs, not to be in fancy, established big tech. The Melee radar is up. What does it mean to you that that's the grand assumption?
Yeah, I mean, you always worry about, the crowded trade or where the consensus is sitting. It's funny because I turned bullish on the bank stocks and the energy stocks after the correction in September, which, of course, a lot of people forget we had a correction in September. But, right after that, it really turned bullish, and now it's become kind of mainstream. And now I'm kind of saying that the group should pull back a little bit. Both groups should pull back a little bit, although I think they'll go higher over time and will outperform most of the rest of the year. And the same thing with the FANGs. They've become kind of the group to avoid. But you look at especially a couple of them, like Facebook and Google, on a technical basis, they're just about to point, after being stuck in sideways ranges, especially Facebook.
Okay, but what is your call,
upside.
Matt? What is your call on the FANGs? Because I've got some people, John Golub at Credit Suisse is pushing against the zeitgeist here, and a few others. I mean, as you say, everybody's tilting against the FANGs right now. What does that signal?
Well, I think it tells us that I think it's the right call. I mean, we might see a little bit of an upside movement here, but the right call, because I do think interest rates are headed higher over time. And the main reason I think that is because that's what the Fed is telling us. I mean, the Fed is everybody's talking about how dovish the Fed is, and they remain dovish. Actually, they're a bit more hawkish right now. I mean, it doesn't mean they're wildly hawkish, but they're keeping short-term interest rates very, very low. They were saying that at the beginning of the year. At the beginning of the year, they weren't talking about tapering on QE. Now they are. But most importantly, they're pounding the table. We're going to let inflation run hot. That's the same thing as saying we're okay with letting interest rates, long-term interest rates, run higher. And unlike the old days, they do have an impact on long-term interest rates because of QE. If they're willing to let the long-term interest rates run higher, that is actually slightly more hawkish, and you don't want to fight the Fed. And right now, they're not as dovish as a lot of people are saying.
Well, and all the while, Matt, Treasury yields continue to inch higher and higher. And right now, the S&P earnings yield is at the lowest relative to the 10-year Treasury since all the way back in 2010. Are we now at the point, the threshold, in which TINA is no longer, in which bonds are relatively attractive enough to start pulling money away from equities?
Well, and I don't think we're quite there yet, but as we push towards 2%, we will be. I mean, a lot of people are saying, geez, we don't have to worry about this situation until we get to 3%. But, you go back the past 40 years, every time long-term interest rates have risen for an extended period of time, it usually takes a full year, so maybe that gives us time. But remember, the long-term interest rates started rising back in August, not the beginning of the year. And so we're starting to get, to that situation where it becomes more of an issue. But every single time interest rates have risen, and let's face it, they're up 200%, even though they're low, it always has an impact. And so my point is that I'm not wildly bearish here. I'm just saying that the risks are higher than they were at the beginning of the year, and people should act accordingly, be less aggressive on the buy side, and even think about taking some chips off the table and raising a little bit of cash.
Matt Maley, thank you so much with Miller Tabak this morning. I tell you, Kaylee, it really sets up an eventful April. I mean, the year so far has been truly historic, but to see I'm still not used, Kaylee, to the VIX at 17.96. That's a new reaffirmation of bull market. I don't know much what to do with it. What I know I'm going to do is lean forward when Gina Martin Adams talks here this week.
Yeah, absolutely. I mean, remember when 17 on a VIX was low relative to history? I mean, we've been in that 20 realm for so long that anything else feels unusual at this point.
It's a real breakout. Major shout out to some of the people helping us on this. I mean, there's just no question we've been locked in that 20, 21, even 23 range, and this is something new for the first week of April.
Absolutely. Well, coming up later today, we'll have more conversation, maybe on the VIX, maybe on the bond market with Scott Meinard. He is Guggenheim Global CIO. That's at 3:30 p.m. in New York, 8:30 p.m. in London. This is Bloomberg.
Tell us something you're doing that doesn't work out, where you've failed or something you can say you're not good at.
Let me tell you something. There is plenty that I am not good at and plenty that I've failed at, but I'm not afraid to fail.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Tom Keene in New York. Francine Lacqua and Matt Miller are off today. Now let's get straight to the first word news. Everyone in England is now being urged to take a coronavirus test twice a week. It's part of Prime Minister Boris Johnson's plan to reopen the economy. Test kits will be free, and a new system of COVID passports will be assessed for wide-scale use. In France, the economy will grow less than expected due to the latest 4-week coronavirus lockdown. The government cut the GDP forecast from 6% to 5%. France is closing schools and 150,000 stores in an attempt to slow the spread of the virus. Will a 4-day, 32-hour work week hurt the economy? Spain wants to find out. Prime Minister Pedro Sanchez's government will ask hundreds of companies to join in one of the biggest tests ever of a shortened work week. Sanchez has earmarked $59 million to help pay for a 3-year program. It's the idea of a small left-wing political party. And Jordan says it has uncovered a plot to destabilize the kingdom that involved King Abdullah II's half-brother. The government says Crown Prince Hamad bin Hussein worked together with unnamed foreign entities. He reportedly is under house arrest and denies he's involved. More than 16 people, including one other royal, also have been arrested. And Tom, of course, this isn't just about domestic stability in Jordan, but regional stability, and there could be serious implications for Israel as well.
Yeah, it's a really interesting story for the people listening this morning going, so what? There's a massive so what always to Jordan. This goes back really to the time of, believe it or not, Lawrence of Arabia, the division of the Middle East and how the Western world came in. And the tension here is Jordan is a pivot point, Kaylee, around even up to Turkey, a pivot point around all of the Middle East. And, you know, this has to be followed closely, particularly by the U.S. State Department.
Yeah, and the State Department already has come out and expressed support for Jordan.
Yeah.
Of course, it is a key U.S. ally, as is Israel, Tom. And I go back to this. Tensions between Jordan and Israel have already been ramping up just slightly recently. So I guess the question is, does that make matters worse on that front?
It's been a balance for King Hussein and for years, and for one of his sons, King Abdullah, it's been a continuation of the balance between Israel and Jordan, and of course with the U.S. always involved there. But what I would really look for, Kaylee, is the response of Turkey to the events we've seen over the weekend. That's a huge unknown right now.
All right, well, we will continue to follow this story. And coming up next, we're going to be speaking to Kit Jukes, Societe Generale's chief FX strategist, possibly his take on the Turkish lira and all of the other action within foreign exchange. This is Bloomberg.
This patch of land in northwest Saudi Arabia is going to become Neom, a city powered entirely by renewable energy. The government hopes the site, which is the size of Belgium, will be a clean energy hub, not only for the kingdom, but also the world.
This here is at the borderline between Mission Impossible and Suicide Mission. Lucky enough, so far we've just been on the right side of the line, yeah. But you know, it's very close to that. You know, this is just smoking. This is nothing ever I've seen or heard of the dimension, the challenge. You know, I'm not talking energy only. You know, but in its broadest context, including the geopolitical dimension. dimension, including the cultural dimension.
NEOM will include a $5 billion hydrogen plant run on wind and solar energy. All of the zero-carbon fuel it produces will be shipped to international buyers in the form of ammonia. When it starts operating in 4 years' time, it will be one of the biggest hydrogen facilities in the world.
Can't explain NEOM on the back of a set of PowerPoints and a video clip. You just need to be here. You need to breathe it, and specifically the startup mode and things happening. Buses all around you here.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Tom Keene in New York. Francine Lacqua and Matt Miller are off today. Of course, Tom, they're off because it's Easter Monday. We're fresh off a long weekend here in the U.S. as well. Although we did get that jobs report on Friday, and you had to work, Tom.
Well, it was a celebration on a Good Friday of a booming American economy. And Kaylee, what I would focus on is not the guesstimate of 1 month data, but in talking to Michael McKee and in talking to our good guests, the only question is how do we recapitulate 7 million jobs, and then from there the movement up to 8 million, 9 million. Maybe the gloomiest numbers we need to recapitulate 12 million jobs. We'll see, but certainly it was a good first step in that direction. Let's get the first step on your Monday morning, and that would be a data check. Yes, so the market's open across most of America, and it's booming. Futures up 21, Dow futures up 195, and the VIX slams in 17.93. There's a very good tape right now. Europe doesn't show me much. We'll get to Chooks here in a moment. The real yield, a negative 0.66. Don't know much what else to say about that. It's been very static so far, and I put Bitcoin in there to get the Monday started because, as I mentioned, Afterthought got a Bitcoin in their Easter basket, which is original, and I said, who put that there? Kaylee, what do you got in FX?
The Bitcoin bunny, Tom. That's who put that.
I like that. Very good. The Bitcoin bunny.
We love some nice alliteration with fluffy animals. But Tom, I want to pick it up and talk about FX, specifically dollar yen, because we are firmly through 110 when it comes to dollar yen. And actually, hedge funds are starting to shift their view on it a little bit. In just over a month, they have gone from net long the yen to net short. And actually, net short positions, the most in 2 years. So clearly, sentiment is turning on the Japanese yen, Tom. The bearishness seemingly taken over. My question is now, we're through 110. What is next, Tom?
Well, what is next is the weather switches in London. Joining us now, Kit Chooks, Societe Generale, Chief Foreign Exchange Strategist. Kit, I think 5 days ago I was talking about Fahrenheit 80-degree record heat. And am I correct that it's snowing in England right now?
Yeah, it's flurries of snow. It's not enough snow to do anything with, but I had lunch in the garden yesterday in bright sunshine. This is a big overnight change.
Well, it's the turbulence of spring, and the turbulence is there. And what I would look at, Kit, just to pause here on a holiday, and thank you so much for joining us, is the humility of it all. There was a great call for strong yen, 105, 103, bold calls down to 190. It swung the other way. Is there a permanence to weak yen here out at 110?
I don't think so. I think the market got itself very long yen pretty much exactly a year ago, really in March as the crisis unfolded. Thought of it as a safe haven currency. And what the yen has done is it's tracked tick for tick, really, the move higher in U.S. Treasury yields. So if we've had a rise in 10-year note yields of 80-something basis points in the first quarter of the year, and that's got us to here. I would say, realistically, I've got the market short yen. I've had most of the adjustment in Treasury yields, not all of it, and things ought to quieten down from here, and then we'll take step. But it certainly punched me in the face, but I think it's nearly over.
Well, Kate, a lot of people have gotten punched in the face when it comes to their call on the dollar. That broad consensus weaker dollar in 2021 just hasn't panned out, and to a large extent that probably also is a higher Treasury yield story. But when do the headwinds start to show up? How sustainable is this dollar strength?
Oh, look, I think the dollar strength is less of a problem for the U.S. than than the impact on other currencies and other places. I mean, perversely. The U.S. is more insulated to its exchange rate than Europe, for example. But I do think so. It's almost a bigger question of it's not the dollar that could hurt the U.S. economy. It's how far can you take Treasury yields higher before you start feeling it in the housing market more clearly, which is one of the weaker spots in the economy right now already. But also, how far can the dollar rise on the back of exceptional fiscal policy in the United States and expectations of what the Fed will do without dragging the rest of the world with it? And I think that's the bigger sort of longer lasting question. I think the second quarter is a turning point for all of this in terms of, not the US doing well, but the rest of us catching some of the love.
But will the EM currencies, for example, be able to catch some of that if there is a stronger dollar and if Treasury yields remain high? I mean, how difficult is the picture for EM right now?
Right now, it's very difficult. Look, most of EM is not getting vaccinated anything like fast enough. Most of EM has seen this big rise in Treasury yields. Most of EM is struggling in a host of ways. But as the seasons change, I don't think it's the level of U.S. yields. I don't think a 2% 10-year note yield is the worst thing that ever happened in this world. They've been coming down for a very long time. That's a low yield. It's the biggest quarterly rise in relative terms since I started work that hurts. So if we stabilize, and look, if you think that the market's going to price in a Fed funds rate 5 years down the road of 2.5%, because that's where the Fed's terminal dots are, we price that in with a, let's call it a 2%-ish 10-year note yield, and the whole thing quietens down, then I think you've got the first piece. So you get rid of the first piece. If the first piece is let's get rid of this overly bearish dollar consensus, I think we've done that. The second piece is let's stabilize the bond market. We'll do that in Q2. And then the third piece is let's get everybody else vaccinated around the world, including Europeans and the Brazilians and all sorts of people. And then I think I'll get a healthy, weaker dollar, healthy emerging markets. But obviously, the last step of that, this is still going to take some time.
Right.
Jukes, I'm absolutely fascinated if it's easy now to make a single best trade or a set of single best trades. Is this a conviction April or not? Is it a mess?
April's never a conviction month. We are in a turning point, so we've cleaned out all of those positions, and I think the third quarter has every chance of being a better place than the second quarter. But the second quarter is a turning point. So, trying to finesse the exact moment when things are looking up. We'll get false dawns, and I'll say stupid things and feel like a fool and have egg on my face plenty of times in the second quarter. But it feels to me as if...
No, go ahead, Kit, please.
I said, it feels to me as if that huge rise in U.S. yields, I'm not going to see anything like that in the second quarter, again for a while. That's the bulk of the adjustment.
To play off the horrific news, is India or Brazil playable given the horrific data we see in their pandemic?
India will be more playable faster than Brazil will be. Brazil, I think, has more headwinds. Latin America has more headwinds. They might be the ultimate test of whether we're out of this. When people start feeling optimistic about South America, I think we're in a better place. But they need more yield support as well as just cheap currencies, and they obviously need stability in terms of their fight against the pandemic. India, I think, now that they produce vaccines and they're distributing vaccines locally, I suspect that it's easier to see how they can get on top of this.
Well, Europe obviously is struggling on the vaccination and pandemic trajectory front right now as well. France is back in a lockdown for the next month, and they just had to cut their growth forecast as a result. How difficult is it for Eurodollar right now? Are we going to test 116? What's your base case?
Yes, I wrote a piece a month ago saying I thought we'd get to 115 in the face of positioning rates and growth. I've actually updated all the charts I put in there this morning to look at them. The rate picture's got worse. The growth picture's got a little worse because the US has got better. So the relative growth picture's got worse, and the positions are much more encouraging. I think that's the bit that troughs out. The low is somewhere between 115 and here, somewhere between today and the end of the second quarter. I hope soon enough that I can get excited without getting into that. But the piece to throw into that is, Europe is going to play catch up with the United States and the United Kingdom on vaccine delivery. It's a big area, but once it starts moving, the same as you did and we did, once it starts moving on vaccinations, I think you can turn the news better quite quickly. And that's not far away, from where we are now in terms of when that really starts happening.
Okay, just one final question. Lisa from the 12 Pins, I believe it's a bar in London. Lisa, thanks for watching. Lisa from the 12 Pins asks, should Arsenal go after Harry? I mean, it's just simple. Now is a time where Harry Kane of Tottenham has to decide to join your Arsenal team. I mean, what's the likelihood here? The disgrace, it's like Babe Ruth from the Red Sox to the Yankees. Can Kane go over to Arsenal?
Well, we took Sol Campbell, and that didn't go down very well over at Tottenham. Look, Harry was an Arsenal fan when he was a kid, last time I checked, but I would put the odds against it. That's not to say I wouldn't think it's a nice idea.
Yeah, well, okay, Kit Jukes, thank you so much. And thank you, Lisa, for joining from the 12 Pins this morning. Greatly appreciate that with Society General. Coming up later, an interview with, the World Bank chief. Carmen Reinhart will join us, their chief economist. That in the 6 o'clock hour. Really looking forward to that. She had my essay of the summer on the horrific economic outcomes of this pandemic. Carmen Reinhart in the 6 o'clock hour. Please stay with us. Tom Keene, the privilege to sit in with Kaylee Lines. Good morning.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Tom Keene in New York. Francine Lacqua and Matt Miller are off today. Well, Tom, the bond market just wrapped up a grim first quarter, and with the economy returning to normal, investors are bracing for higher yields and even more losses to come. But while there are a lot of reasons to fret about debt, Matt Winkler, Bloomberg News editor-in-chief emeritus, says there are more reasons not to. He joins us now. Matt, is the primary reason not to worry because the Fed is still there providing a backstop to this market?
That's always a good reason. Never bet against the Fed, and the Fed is, in fact, doing exactly what it said it was going to do, which is keeping interest rates, at least short-term interest rates, as low as they can for the foreseeable future. And that certainly determines how everything else is going to play out. But there's some other reasons why people shouldn't be so anxious. One is, the runaway inflation that everybody is fearful of just isn't there at the present. There's a lot of innovation. But probably the most important thing about the market is that buyers and sellers are coming together in the U.S. credit markets in the best possible way. You're seeing record amounts of debt. They're being snapped up. The debt ratios, which is really a way to measure health of a company, the debt ratios of American companies, by and large, are very, very low on a historical basis. They got to their lowest level probably around 2011, and they've stayed low. And that's a good sign because it just means that there isn't a problem with credit and debt with corporate America.
Matt, and the article's wonderful, Matt. It really harkens back to your years at the Wall Street Journal, just holding court for all of global Wall Street and the bond market. That's great, but, within the gloom that's out there, and you're pushing against the gloom, is a singular idea, will people show up and buy this? Is there any indication of the so-called crowding out, that the government issuance will crowd out others in the bond market or other asset classes?
None that we can see, Tom. You're seeing record issuance in high yield. You're seeing record issuance in investment grade, pretty much across the spectrum. State and local government debt, no problem either. So that age-old worry crowding out just isn't there. Yeah.
Well, the gloom is there, and it's the walls of worry of the bond market. You and I have seen this before. How does Matt Winkler define a bond bear market? Is it a percent change of price?
Yeah, and also it's a grinding process. It takes years, actually, probably. We've seen what people have described as a bear market, like this quarter that we just went through. But it's not entirely clear, since interest rates peaked in 1981, that these setbacks could really be described as a bear market. And it's probably premature, Tom, to characterize the latest setback in the first quarter the same way. If you recall, there have been all kinds of, tumultuous moves in the market over the past 20 years. None of them actually turned out to be bear markets for bonds.
Interesting. I want to go back to the issuance question that Tom was talking about. Do you think we're going to continue to see companies coming to the market at the same speed at which they were over the course of the last year? You saw companies like Apple, which has plenty of cash on hand, something in the ballpark of $200 billion, issuing debt not because they needed to, but just because they could, and borrowing costs were so low. Is that type of behavior going to continue in this kind of environment?
Sure. As long as interest rates are low, as long as long-term interest rates remain below the historical average, companies have, and state and local governments as well, have every incentive to borrow as long as they can, particularly when the Fed itself is saying, we are not prepared to raise rates or tighten credit anytime soon. So, yeah, I would expect companies to continue the pace of borrowing that they've done. And by the way, that's healthy because what's going on here is everybody is lowering their cost of funds. The government, the U.S. government, is lowering its cost of funds every time it borrows, and so are companies, and so are state and local governments. And that means the debt ratios of companies are going to continue to be low because they're refinancing at rates that are way below the historical average.
Matt Winkler, thank you so much. Matthew Winkler, writing for Bloomberg Opinion. This is must-read for Global Wall Street this morning. It's just real simple. It goes, yield goes up, price goes down, but the ramifications of it, not so much within the market, but within the enthusiasm to own debt is there. It's a great essay. We'll get that out on Twitter as well. Kaylee, I look at the bond market, and I think here, as we recalibrate, we got to recalibrate to John Farrow's The Real Yield. And the answer is the real yield. It's sort of kind of like moved, but we haven't been seeing the big move. And for the bond to high yield people, the real move would be to see the real yield move from a negative 0.66% up towards zero. We haven't seen that higher real yield yet.
Yeah, although it had moved quite remarkably quickly. When we're talking about velocity, Tom, what we saw in the first quarter was a remarkable move. And this is something that Kit Jukes of SocGen alluded to in our conversation earlier. A lot of that move came very quickly. Will things start to slow as we move forward through the next 3 quarters? I think that is a key question, Tom. All right, well, coming up on Bloomberg Radio, we're going to talk to the CEOs of one company that issued a lot of debt over the last year, Delta Airlines CEO Ed Bastian. That's at 4 p.m. in New York, 9 p.m. in London. This is Bloomberg.
Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim. We're going to be riveted to that, and we're going to do what is required.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think it can reinvigorate labor with this bill, but also the entire American economy as we move forward here with the American Jobs Plan. I mean, inside that bill, there's lots of components that get America back to work, to add to the news today, but also rebuild America, quite honestly, with infrastructure, with climate resiliency and climate change, with clean water, with racial equity in the care economy and the caregiving economy. There's lots in this. Labor will be very happy with this plan, but not just labor, the American movement, America as a whole should be happy with this plan because it's kind of the next step from the American Rescue Plan, and we saw some benefits of the rescue plan today with good economic policies, a competent vaccine plan. So it's about building momentum. A year ago today, the secretary stood probably right where I am, and he was talking about the job losses in this country from the previous month because of COVID-19. 1 year later, we're coming back, and we're going to come back strong. And with this American Jobs Plan, we're going to come back stronger than ever in our country.
So, Labor Secretary, there's a question here going forward about whether we have the labor required to fill some of the roles that we are looking to build out. And I'm thinking infrastructure in particular and manufacturing, where we see job openings continue to increase and yet not necessarily people getting hired, not people to fill them. How are you bridging that gap? Where do you see immigration? Where do you see unions playing into that particular issue?
Well, I think first and foremost, we still have almost 8.5 million Americans right now out of work. There's also some other Americans that have not been in the workforce in a bit. It's about encouraging those folks to come back into the workforce. And then we need to have conversations about immigration. There's no question about it. The city that I was mayor of, we have a lot of biotech companies and tech companies, a lot of college universities that were educating not just kids from all over the United States of America, but quite honestly from all over the world. And those are conversations that we're going to have, and the Biden administration is going to have those conversations, and I'm going to have those conversations right here at the Department of Labor as well, as far as moving our economy forward. Again, it's about creating good opportunities, creating the middle class, strengthening the middle class, and it needs to be an all-hands-on-deck approach.
Does this labor report, because it was so good, make your job more difficult to lobby for that $2.25 trillion plan?
I mean, I think it was a good report, but we're talking 1 month snapshot. I mean, I think that we still have lots of concerns out in the economy. We still have concerns with COVID. COVID's not gone away yet. There's other variants of COVID that's popping up in different places in this country. So, I'll celebrate, I'll take the victory today, I suppose, or the encouraging news, but we still have a long way to go. We're not anywhere near where we were a year ago today. Actually, I should say a year ago, a month ago.
That was U.S. Labor Department Secretary Marty Walsh speaking on Bloomberg following Friday's jobs report. And of course, Marty Walsh, the former mayor of Boston, Tom, and I know you have your eye on one Boston sports team in particular this morning.
Well, I would. I know you're watching the NCAA. I'm beyond that. My bracket was so bad. And then the Red Sox made it. Talk about a bracket. The Red Sox this year, Kelly, their worst three-day opening at Fenway Park since 1948. They look like my childhood, like my youth. What are you watching?
Well, I'm not the biggest baseball fan, Tom. I got to admit it. I'm more of a basketball gal. And the NCAA final men's championship is tonight. Baylor versus Gonzaga. Gonzaga made it after the most incredible buzzer beater in the Final Four on Saturday, topping UCLA. So I'm watching that. And Francine Lacqua's performance in the TV Newser March Madness bracket, Tom. Right now, she is in third place. Depending on how it goes tonight, she could come out of this thing with a bronze medal, Tom. I'm quite proud of her.
Well, she's killing it, I'll tell you, in the bracket. And, you and I went down in flames.
We're in a lowly, I think, 22nd and 25th place. Wasn't our year. We'll get them next year, Tom. It was a pleasure having you with us on Bloomberg Surveillance Early Edition. Coming up in the next hour, Mark Chandler, Bannockburn Chief Market Strategist, will be joining Tom and Lisa. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
We still have a long way to go. We're not anywhere near where we were a year ago today.
Ultimately, what we want to see is real wages rising.
It's going to be still a long haul to really recover that quickly and to get inflation higher.
This could be a shorter but hotter cycle.
The US is going to tug everyone along for the ride. It's just going to take a little bit of time for the synchronization to kick in.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance. We get you started on a 5-day work week in America. Most of Europe, some of the world shut down today, a post-Easter view, but we are very much open. Ferro, off. Lisa, let's get right to it. This is a market that we did not expect in the first of the year.
No, the idea here being that the reflationary trade is being led by the United States, and how much does that disrupt the rest of the world? A strong dollar, not good for emerging markets, and not good, frankly, for a lot of places that are seeing their debt loads grow more expensive. What was that, Tom?
I'm looking at futures. We're going to address the dollar in a moment with Mark Chandler. We start on foreign exchange. That'll be great. But Lisa, I mean, futures lift off that jobs report. The levels, Lisa, which is what I'm losing grasp of, 4,031 SPX, 33,000 Dow, 13,400 NASDAQ. We're really beginning to lose scope and scale of this great bull market.
The idea here being that the bigger risk right now is overheating. The bigger risk is going too far. The bigger risk is that these record highs will keep climbing to new record highs in the United States as the United States departs from the rest of the world. The consequences of that is what Wall Street is contemplating this morning.
Well, we'll look at it. We've got news flow here. Lisa will touch on that in a moment with a brief. I do want to state that the next Fed meeting is April 28th, so we're a bit distant from that right now, and maybe we'll get a setup here for it. Let me do the data right now. I mentioned the futures up 21, Dow futures up 202, NASDAQ not quite as good a percent change as the Dow. The VIX to me is a huge, huge story. The VIX at a 31 angst comes into 23, 24, 25, and is hugely broken down in this bull market, 17.92 on the VIX. And I'm going to say the tip point there was a stimulus as well. In the yield space, well, it's a churn to the market right now. 30-year yield works a little bit higher. BitDog, 58,000. I'm rounding up there collegially. And on the dollar, yen, 110.61. We'll talk to Mr. Chandler about that in a moment. Lisa observes the week.
I will say, Tom, just if anyone is wondering why we're talking about the Red Sox losing or Godiva chocolate for your Easter holiday. You can just know that markets are closed in many parts of the world, so we'll have ample time to talk all about the tots. Markets are closed today in many parts of Europe, as well as Hong Kong and China. So a slow day, a day when actually you could potentially see more volatility as people try to figure out what's happening in the week and months ahead. Meanwhile, at 10 a.m., we get some data. ISM services come out from the United States for the month of March. We're expecting an increase significantly as people get out and move around, but we're also getting, and this is actually really interesting, February durable goods and factory orders, which is the opposite story. We're expecting to see a decline. How much, Tom, do we care? How much are people just going to dismiss this as bad weather, as potentially the world still shut down? That is backward looking. We are all looking forwards. And today, the IMF and the World Bank are kicking off their annual meeting. And this is going to be really interesting because, yes, the overall theme is going to be global warming. A lot of people talking more about that. But really, the theme is getting vaccinations to every place in the world. And this two-tier economy that's really setting up with the U.S. leading the way, causing disruptions for the emerging world, as well as, frankly, Europe, Tom.
Well, we'll have to see there, of course. Managing Director Georgieva, I'm scheduled to speak with her at some time during the week. I really want to focus on, we should mention as well, folks, on the pandemic, where we have wonderful numbers in the United Kingdom. I'm going to say very good numbers in the United States. There's some hot spots in the U.S. As well, but there are grim numbers abroad, and we'll address that with the leadership of the IMF later on this week. Right now, with foreign exchange, the global litmus paper for the system, Mark Chandler joins us with Bannockburn, their chief market strategist. Mark, thank you so much for joining us. What does strong dollar signal for the equity market and for the fixed income market?
Yeah, it's in some ways, Tom, I think that they both are all reflecting the same kind of thing, and that is, as Lisa was saying, is this incredible divergence between what's happening in the United States and what's happening in the other major industrialized countries and in emerging markets. And I think no other country has the political will or the wherewithal to do what the U.S. is doing fiscally, and the Federal Reserve is more aggressive than other central banks and continue to buy U.S. bonds.
Mark Chandler, is divergence tradable? I mean, do you want convergence or divergence to get alpha?
Well, I think that in the short run, and we're still in that short run, is divergence is still the theme, and we're going to see this play out when we get the final PMI readings from Europe starting later this week. But the whole host of data, including that Friday's U.S. jobs data. I think that the key thing here that so far I haven't heard you or Lisa speak about, and that is that the bottom line here is the market is pushing back against Fed ideas that they're not going to raise rates until after 2023. After that jobs data before the weekend, the Eurodollar futures, looking at the December 2022, is already pricing in at least one hike. And you can see this as well in the Fed funds futures. So I think this is an important thing, the market pushing back against the Fed's more dovish views. And this is what's, I think, helping take the dollar higher. And this whole idea about stronger U.S. growth continue to be revised up, I think is really the key to the U.S. equity market.
Well, do you get on this train, Mark? Do you say that, yes, the Fed's going to have to capitulate to the market's view, or do you say don't fight the Fed and perhaps bet against this stronger dollar trade?
Well, I think it's a little bit early to bet against the dollar trade, but here's what I think is going to happen. I think that the Fed has given us a sort of the bar for when they're going to begin tapering. And they say when there's significant progress towards its goals. We had almost 1 million jobs being created last month. The early call for the April report, which we don't get until early next month, is for another 1 million jobs. So that means by the time the Federal Reserve meets in June, the U.S. economy would have created something on the magnitude of 2 to 2.5 million jobs. I think that could meet the Fed's litmus test. And by that time, we're going to get inflation above 2% as the base effect from last year's deflation drops out of the year-over-year comparisons.
Wait, so you're saying that you do think that the Fed will actually have to hike rates before when they say they are going to hike rates for the first time and they're going to start tapering, which raises a question, how disruptive is this for the rest of the world? How much does this create outflows from particularly the developing world?
Well, on one hand, you're right that the U.S. bond yield increase is sort of dragging other interest rates higher. On the other hand, the strength of the U.S. economy, you're going to see this in the IMF's forecast tomorrow, like the OECD's forecast. They're going to revise up world growth, primarily because of what's happening in the U.S., secondly, what's happening in China. Stronger U.S. growth is going to help fuel growth in U.S. trading partners like Canada, Mexico, as well as countries in East Asia, who the U.S. imports a lot of consumer goods from. So I want to break down that emerging markets, and while rising yields hurts, and the stronger dollar hurts, the strength of the U.S. economy overrides that in the short term.
News breaking right now, widely expected GameStop, and of course this with the Chewy management really driving forward the theme. They're going to offer 3.5 million shares. The stock moves down 9.1%, which would be what you'd expect with a share announcement, maybe down 3, down 4%. This is an at-the-market equity offering program. And Mark Chandler, I want to fold that in to the great underestimation using foreign exchange as a litmus paper. Is it corporations adjust? How will American corporations adjust to the superior divergence, the excellence of the American economic experiment?
Well, in the short run, I think it's obviously positive. But in the medium to longer term, this divergence is not going to last forever. We're not talking really about canceling a recovery in Europe or recovery in parts of Asia. We're really talking about postponing, delaying that until maybe the second half. And so I think that this divergence will morph into convergence, but we're maybe 3 months away from that.
Mark, just to wrap everything up, I want to bring some news. Berkshire Hathaway borrowing money in the Japanese bond market for the third year in a row, as they say that they're going to be making investments in Japanese companies. Is this smart? Do you see other investment firms doing this, basically levering up at basically free costs based on where borrowing rates are in Japan and then investing in companies there?
Well, I think that this isn't really about a currency view as much as it's really about matching your assets and liabilities. So oftentimes, when a corporation is buying a foreign asset, they can acquire that currency by buying the currency, or if they're large enough, like Berkshire Hathaway, they can borrow that currency and thereby not having a currency mismatch. So I think this is really just about running a balanced book and avoiding misalignments between your revenues and your expenditures.
Mark Chandler, we have to leave it there. On a Monday morning, Mark Chandler with perspective from Bannockburn, their chief market strategist. And so much of this, Lisa, is the back and forth and the ebb and flow. And the fact is the first quarter really came on for the equity market. And I'm going to say this again. I don't have it in front of me. In fact, I can do it right now. I mean, you got the GameStop news, Lisa, as well. But you know the thing I'm looking at? J.P. Morgan earnings April 14th. I'm going to really be looking forward to that.
Yeah, the state of the consumer and how well they're doing, how much their savings have gone up, how much they're paying back their debt. I do want to just sit on GameStop for a second.
Please.
Offering 3.5 million shares at a time when the retail investor, the retail trader, is actually fading away. I mean, a number of stories. This has been the sort of popular theme over the past few weeks, is that the retail trader has gotten out of the business as they actually have other things to do and they can go outside and take trips and engage in the real world. And this raises a question for this real world offering of GameStops. Is it too late? Are they going to have the retail investors and frankly the institutional investors who expect retail to continue to ebb away?
I think with GameStop, and I think this has been underestimated by too many, is the gentleman from Chewy that's come in there. There's a Chewy effect going on now, right out. I'll get it out, folks. 3, 2, 1. There is a Chewy effect going on right now, Lisa, and it's just an Amazon equivalent. The hope and prayer that Chewy can do Amazon-like returns, and then the belief is, why can't GameStop do that?
You get 2 dogs, and then it's all Chewy all the time.
Chewy,
anything having to do with Chewy means skyrocketing. I mean, honestly,
make it so easy.
I'm sure they do.
Spend money.
You don't order from Chewy. You order from some organic, high quality place from the Upper East Side for 2 different dogs that have 2 different culinary habits. I will say, though, this does raise a question of how much momentum there is behind the market that hasn't already been baked in as people start to get back to the world and savings start going out of the markets and into the real activities and things that we buy.
Futures up 20 down, futures up 198. A nice lift to the market again. Europe closed, but America very much open. On the stock market, on this great bull market, Anna Hahn joins from Wells Fargo. An important conversation. We do that next. Stay with us.
With the First Word News, I'm Ritika Gupta. Republicans may be willing to support a much smaller infrastructure spending bill than President Biden is proposing. Senator Roy Blunt says he could see bipartisan support for improving roads, airports, and other items, but that's only if the administration cuts back the proposal by 2/3. The U.S. is moving ahead with plans to retaliate against 6 countries that tax internet-based companies such as Amazon and Facebook. They'll be hit with tariffs that could total almost $1 billion a year. Amongst the goods targeted, Austrian grand pianos, British merry-go-rounds, and Italian anchovies. Everyone in England is now being urged to take a coronavirus test twice a week. It's part of Prime Minister Boris Johnson's plan to reopen the economy. Test kits will be free, and a new system of COVID passports will be assessed for wide-scale use. Jordan says it has uncovered a plot to destabilize the kingdom that involved King Abdullah II's half-brother. The government says former Crown Prince Hamza bin Hussein worked together with unnamed foreign entities. Hamza reportedly is under house arrest and denies he's involved. More than 16 people, including one other royal, also have been arrested. An executive shakeup may be on the way at Credit Suisse. Bloomberg's learned the Swiss bank's leaders are discussing whether to replace risk chief Laura Warner, while CEO Thomas Gottstein would stay in his job. Credit Suisse is reeling from losses that could reach into the billions from the collapse of Archegos Capital Management. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Be
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
What the president proposed this week is not an infrastructure bill. It's a huge tax increase, for one thing, and it's a tax increase on small businesses, on job creators in the United States of America.
On Meet the Press, Roger Wicker, the Republican from Mississippi, and we thank NBC for that film this morning. We say good morning to all of you. Lisa Bramwitz, Tom Keene, Jonathan Farrow, off. And I think it's chilly in Capri, though. There was snow in London earlier, Lisa. And
is this the silver lining?
Yeah, I think it's a little chilly in Capri this time around for young Farrow.
No schadenfreude or anything.
Yeah, right now, futures up 21, Dow futures up 208, a nice lift to the market. Let us address Washington, and we do so with a changed view after a near million jobs report. Emily Wilkins joins us with Bloomberg government. As we saw there from the Republican of Mississippi, Emily, there's beginning to be a structure to the pushback. What is the pushback of moderate Democrats to the Biden stimulus bill?
I think one thing that you are seeing from moderate Democrats is there is a little bit concern over the price tag, but we're also seeing a little more nuanced concerns as well, such as the salt cap tax that was put in Republicans in 2017. That's something Democrats, particularly in New Jersey and New York, want to see lifted. I mean, you got Majority Leader Chuck Schumer, who absolutely agrees with that as well. I mean, at this point, we're going to see, I think, a mostly united front from Democrats, but sort of behind the scenes are where the negotiations come in, right? We want this. We don't want that. But they've got several months here to get to yes. This isn't something that's going to happen overnight. This is something we're going to see occur over time.
But help me with the framework of the number. Do you see this as $2 trillion and a real $2 trillion, or do you just assume this migrates down to, not forget about 1.9 and that gimmick, but it migrates down to 1.5 or 1.6 trillion? Is that in the zeitgeist?
It could potentially be, but at the same point, I do think you have this sense from Democrats. I mean, look, if we look back on what happened with the COVID package, and we sort of use that as a template for what happens here, the Biden administration, they want to go big. They want to get stuff done, and they don't want to water down their plan because of Republican concerns. And I think Democrats, 2022 is coming. They know that they don't have great chances to keep the House. They want to make sure that they're doing something big, something that they can go home and point to for voters. And I think that there's a sense that the time to act is now.
Well, Republicans have sort of a nuanced message here. On one hand, they say they don't want tax increases, and this plan is not really an infrastructure plan. It's a big, grand plan with a small infrastructure subset being advertised as something else. And at the same time, they want to say we are for infrastructure